Honorable members, good morning. Good morning to the team from the Auditor General, and thank you for being here. I hope everyone had a wonderful weekend. Good morning to my colleagues from Parliament and everyone who is here. I think from PMG, from the media, and so on. So thank you very much for being here. Today we are getting a report from the National Lotteries Commission from the Auditor General on the audit outcomes of the National Lotteries Commission for the financial year 2023-2024, which means up to the end of March last year. So that's what we are busy with today. So could I ask that in your introductions, so we'll get an opportunity to introduce yourselves, but also in your introductions, because I'm always mindful of the public education element of our work, if you could just explain in very simple terms. You don't have to go into sections of legislation what the National Lotteries Commission is, what does it do, why does it report to Parliament in this way, and why do you guys therefore report to Parliament, so that members of the public who are watching on the live stream also have an appreciation of why it is important. So you don't need to give a long story, just in very simple terms say what the National Lotteries Commission does, and then get into the audit outcomes. We will then take questions once you are done presenting. I am hoping that we can take a break in 1.5 hours time, and hopefully we will complete the questions soon thereafter. So over to you. Thank you.
Thank you and good morning, Honourable Chairperson, and to the Honourable Members. Thank you for having us. My name is Corneille Meiberg. I'm the Business Unit Leader responsible for, amongst others, the National Lotteries Commission. I'm accompanied today by Apanduli Mtayani. She's the Senior Manager or Engagement Manager responsible for the audit. And I think it's the second year the second year that she's been responsible. And then also Siswe Nkumalu, he's the Deputy Business Unit Leader accompanying us today. So Apanduli will do the presentation, and as she requested, she'll also do the brief overview in terms of the mandate, the reporting lines, so that we just clarify the positioning of where NLC fits into the bigger scheme. I think from my side, before I hand over to her, we've seen that there has been a number of years where the National Lotteries Commission has been qualified. For the last 2 years, specifically, it was more in relation to the grants management. And as Apanduli presents, she'll then also take time to unpack the reasons for that qualifications and what happened and what we saw in the books. We've also seen over the last year or two that there is some initiatives and actions from the Lotteries Commission as they're working towards stabilizing and addressing all the things that came up in the past, working on that. So amongst others, they're working on their grants policy. They've made some changes there, how they deal with the grants. They have implemented site visits to the sites before they approve. The accounting policy has been adjusted. So those are some of the things that we've seen they started to implement. Nonetheless, there is still work to be done because they are still qualified, as I indicated, as of the end of 2024. But we do see these initiatives coming forward. With that, I'm going to hand over to Apanduli and to allow her the time to unpack and take us through what we've seen during the past year. Thank you, Chairperson.
Good morning, Chair. Good morning, members, and good morning, colleagues. Thank you for the opportunity to take you through the audit outcomes of the National Lotteries Commission for the year 2023-2024. In terms of the mandate of the entity at high level, Chair, the entity is responsible for regulating the national lottery, including the sports pools. And how they do that is they've appointed licensed operator, and at present that is currently Ituba, which is responsible for running the national lotteries process in terms of issuing the tickets, selling the tickets, and then members of the public participating and playing in those processes and ultimately winning the prizes. And secondly, the entity is also responsible for grant funding, which is a function that is emanating from the Lotteries Act, wherein the legislation requires the entity to identify good causes that can be funded through grant allocations. The Act further, Chair, specifies the different sectors which should be funded from those funds, including the non-profit organizations in terms of charities, the arts industry, as well as sports, and then any other miscellaneous activities that the minister or the board would find to meet the definition of good and worthy causes. NLC is a Schedule 3A public entity listed under the Public Finance Management Act, and also as an entity of the Department of Trade and Competition. And by virtue, as a national entity, it is accountable to Parliament, and therefore within each and every accounting period, they have to report on how they would have performed in terms of how monies were spent, and also how they would reflect on how they would have performed against their annual performance plans. And ultimately, as the auditors, we need to then empower the members of Parliament in terms of doing their oversight role by sharing the audit outcomes and also reflecting on the areas that require improvement. In terms of the presentation, Chair, I'm going to start on slide 4. The intention around this slide, Chair, was for us to take stock and reflect on where we would have left off in our previous engagement when we presented the audit outcomes of the year that ended 2022-23, in reflection of the audit outcomes of the year 2023-24 after we had concluded the audit process. In the first block, we are reflecting that the entity would have received a qualified audit opinion in the prior year and also received a qualified audit opinion in the current year. So the audit outcome in itself is consistent. However, there is a slight improvement because the nature of the qualification areas, in as much as it's still sitting under grants, differs slightly. In the prior year, we would have reported, Chair, that the entity was unable to produce reliable evidence to confirm that all grant allocations expenditure had been correctly accounted for due to the poor state of their record keeping at the time. This is something that the entity was able to resolve working with us closely, where they went back and investigated what would have transpired and put together a portfolio of evidence that assisted us to navigate and confirm that there were no issues around that and we were able to resolve the qualification. However, in the current period, Chair, we then identified that the entity was recognizing grant allocations expenditure in the annual financial statements, wherein these grant allocations had not met all the conditions as it is required by the accounting policy of the entity, as well as the applicable reporting framework. Chair, I'm not going to speak at length on this one because there's an upcoming slide where I will further unpack the reasons around the qualification. Moving to the next area, we are reflecting, Chair, that we would have again identified instances of non-compliance around a number of different compliance subject matters. At most, Chair, what I want to leave the committee with regarding this one is that this is an area that needed an attention and improvement from the end of management in the entity. However, seeing that the year 2025 has already ended, then perhaps we'll take stock and reflect on how they would have performed when we conclude the audit of this current cycle. In terms of the audit of predetermined objectives, Chair, again, we reported a material finding in the current period, and that is consistent with the outcome that we would have also shared in the prior year, where we also reported a material finding. But Chair, again, notable is that the nature of the issues are different. So in as much as the outcome did not change, but there is a slight improvement in terms of the issues that we are identifying. Last year, the issue was that there was an issue around usefulness of the indicators, where we identified an indicator which the entity had not clearly defined in terms of determining how the indicator is going to be measured, as well as the nature and the kind of supporting evidence that is going to be required for them to be able to support the achievement. In the current period, what we then discovered is that there is an indicator emanating from the Lotteries regulations, which had previously been included in the annual performance plans of the entity, but for the year 23-24, this had been removed by management. And when we inquired to understand the reasoning around it, it was more to say the entity would not achieve this indicator, so they simply opted to remove it from the annual performance plan, wherein due to the nature of the business, they would have already prioritized this particular function and activity, except this was not presented in the annual performance plan as well as the annual performance report consequently. Now, what that means is this particular issue, it would then result in the entity not being able to reflect on its performance against this particular indicator. And I will also try and unpack it again, Chair, when we get to the specific slide when we are talking about the audit of predetermined objectives at length. At high level, Chair, around the capacity and capability of the entity, we want to bring to the attention of this committee the issues around the vacancies in the distribution agency committee. Loosely we call that a DA, but it means a distribution agency committee, which is the committee that is responsible for adjudicating grant applications. Now, what we observed there, Chair, is that historically there would have been a distribution agency committee for each of the sectors that are funded. That includes sports, charities, as well as arts and culture, and any other activities that are involved as it is allowed by the legislation. Now, what would have happened in the prior year is we observed that there was only one committee serving all the different sectors, and that had an impact in terms of the performance of the entity and it delivering on its mandate. Moving to the next slide, Chair, on this slide we start off with a graphic which is illustrating that the entity would have received qualified audit outcomes for the past 4 years, including the year on which we are reflecting today. And in terms of the qualification area, Chair, I would have said I'll unpack this further on this slide. So in terms of the qualification area, again, the accounting policy of the entity requires that they must account for grant allocations expenditure in the annual financial statements when all conditions have been met, and that includes both administrative and legal requirements as it is outlined on the grant agreement. Now, when we came and audited, we identified that there were instances wherein not all conditions had been met. However, the entity had already accounted for this as expenditure in their books. The process that is followed by the entity is that when the provincial offices receive applications, there are officials that are responsible to check the applications against the prerequisite documents that need to accompany the applications and complete screening checklists, risk metrics, and also just verify that all those documents are in place. When documents are not in place, those officials are responsible to send the applications back to the applicants or the beneficiaries and alert them to the missing information and inform them that before they resubmit again, they need to make it a point that all these supporting records are in place. And after that process has run its course, and if the officials are happy that all the documents are in place, they then proceed and submit the applications to a provincial manager who is then responsible to give the final approval and final say in terms of submitting the application further for adjudication by the distribution agency committee. Now, these processes, Chair, would not have worked effectively because unfortunately there were circumstances where applications that should not have proceeded to adjudication were rather submitted and ultimately were approved and allocated funds for grant funding in as much as they should not have reached that stage. So in a nutshell, that is the issue around the accounting treatment for allocations of grant in the current period. There was also an instance where we noted that the entity accounted for grant expenditure, whereas the grant agreement in itself had not been signed between the entity and the grant beneficiary. So that those were the issues around grant funding management. On the next block, we are talking about the annual performance report, Chair, where an indicator emanating from the lotteries regulation, which is called, which requires the entity to adjudicate and process applications for grant funding within 150 days, which was not included in the annual performance plan of the entity. Again, Chair, the entity had prioritized the activity because this is one of their key main activities and mandate. However, it was just that the entity was not reporting on its performance against this particular indicator. And the reasoning for management not to include the indicator was that the entity is not going to be in a position to achieve this particular indicator, which we found to be unreasonable, because rather the management was supposed to set a target that is achievable considering their circumstances, and also in the event where they report a non-achievement, then they would be in a position to give oversight bodies an explanation in terms of why the indicator was not achieved. Now, Chair, because this indicator was not presented in the annual performance plan as well as the annual performance report, it is our understanding that that would have undermined the systems of transparency, accountability, as well as oversight, because there was just simply no reflection on how the entity is performing against this particular target chair or indicator, Chair. And also it is worth noting that based on our observation during the audit, we would have noted that the entity struggled with processing applications within the set timelines, because mostly of the issue that I spoke to in terms of vacancies around the limited number of the distribution agency committees that are in existence compared to the prior years. In terms of the compliance with legislation, Chair, we identified a number of findings around different compliance subject matters. The first one being the annual financial statements, where we are reflecting that the entity was not able to prepare annual financial statements in accordance with the applicable financial reporting framework, and that is mainly due to the audit outcome which we have reported on the audit of annual financial statements. On consequence management, Chair, we found that the entity had not conducted a determination process as it is required by the irregular expenditure framework within 30 days, as it is within 30 days from the date of identifying and confirming the irregular expenditure. What that process entails, Chair, is the entity determining the root causes around what led to the transgressions, as well as the officials that are responsible for that transgression incurring, as well as determining if there would have been any financial loss suffered or incurred by the entity. And lastly, to identify if there are any indicators or suspicions around fraud, and in which case, if there are suspicions of fraud, then the particular transaction would have to be referred for further investigation. Now, because the entity would not have undertaken these processes, therefore the entity did not equip itself and empower itself to be able to make decisions insofar as are these transactions that require further investigation, or what are the root causes, so that they can be able to improve the internal controls that would prevent these circumstances from reoccurring again. On asset management, the entity again had an issue around the legislation requires the entity to consult with educational institutions and non-profit organizations where there are assets that are available that can be distributed for furthering those functions before they are actually sold. So the entity used an auction process to sell the assets to staff members without actually complying with that particular legislation. On expenditure management, we identified about two findings, and the first one is the inability by the entity to prevent irregular expenditure, and the second one was around our limitation in terms of confirming that resources would have been used for intended purposes around grant management. Chair, we visited a number of sites where grant funding is actually being utilized and implemented, and we identified different instances where when we get there, the entities would have articulated that they used funding for particular reasons, but when we look at the records, there are no sufficient records for us to be able to substantiate, such as the invoices, if money was used to pay for certain goods and services, or the entity would allude that a particular laptop would have been bought, but when we want to look at the laptop for physical verification, the laptop would not be in place. So those are the nature of the issues that were identified around expenditure management. On procurement and contract management, Chair, I think at length the one area the entity was struggling with is proper record keeping, because there were instances where we experienced limitation of scope because the entity simply did not have documents that we could look at to confirm if proper procurement processes had been followed in accordance with the applicable legislation. On other accounts, we did identify instances when we examined the CSD reports, the Central Supply Database reports. We would then identify that at the time when the award was made, the entity's tax matters were not in good standing according to the SARS interface report, which is included in the CSD report. And also there were instances where the request for quotation would have articulated what are the goals the service providers are going to be measured against and how the points are going to be allocated. But when the evaluators are sitting and looking at the received quotations, they would then evaluate and allocate points using different goals than what would have been prescribed in the request for quotation. So, for example, if there was a goal for we are going to award you 10 points for if the company is owned by women, as an example, then they would have gone and introduced a different goal than what was previously cited on the request for quotation. Or if points the maximum points should have been 10, then you would find that varies. At times it's 15 or 20. So it's a matter of the quotations would have prescribed the manner in which the points are needs to be allocated, but what would have been applied by the evaluation committee would have differed to what was prescribed in the request for quotation. And that resulted in instances where quotations or awards were made to suppliers or service providers that did not earn the highest points. So those are the nature of the issues that we identified during the audit of procurement and contract management. Chair, I spoke to the issue of the indicator around the processing of applications, which was not included on AOPO. I spoke to vacancies in the distribution agency committee. Now, those two issues, they would then have manifested themselves in terms of the ripple effect, manifested themselves with an underspending on the budget that was allocated for grant allocations. So as a result, the entity underspent on grant allocations by 957 million. Over and above that, the other reason for underspending was because the entity at the time when we were conducting the audit had still not reactivated the processes for proactive grant funding. Around, I think it was the year 2023 sometime, the board would have taken a decision to place a moratorium on proactive grant funding due to the issues that existed in the space, so that they can take the time to overhaul their internal controls and put in place measures that are going to assist them to improve the control environment and prevent such irregularities from recurring again. So as a result of that, then there was underspending on grant expenditure, since that particular activity was still not active as at the end of 31 March 2024. At high level on vacancies, Chair, we are highlighting that the position for Chief Operations Officer would have been vacant since 27 August 2022 when the incumbent resigned, and that position has been occupied by acting officials since that period. And I think recently we learned that the person who was in the position when we concluded the audit has now been replaced by another official. So the position in itself is still vacant, and it's a key position at management level. At high level, also, there were other divisions, which includes legal, finance, and as well as ICT, that had high vacancy rates, which could have or might have had an impact in terms of the entity's ability to be able to deliver on its mandate. Chair, again, this would have been our observation as at 31 March 2024. So I'm sure when management come, they would reflect that this picture might have changed drastically compared to where we were at the time. On our audit report, we also included about 3 material irregularity notifications that we issued to the entity. There's a specific slide where I'm going to unpack material irregularities, but at high level, the 3 material irregularities that we issued were around 3 issues. The first one on Muteo Sports Complex is an event where the entity paid grant funding of around 6 million to a beneficiary. However, the intended purpose or the sports complex that was supposed to be established was never delivered. On the second part, there was an old age home, a Dumbe old age home in KZN, that had been identified, and the need had been identified to develop this facility so that the people of that community would then benefit from it, wherein we noted that funding of around 26 million was paid towards the beneficiary. However, the construction was never completed. So there is work underground that was there when we went for site visits. However, the structure had been abandoned by the contractor without reaching practical stages. I'm going to unpack this one again when we get to the slide on the material irregularities. Lastly, when the entity uncovered that the beneficiary on this old age home was struggling in terms of finalizing and completing the work relating to this development and the construction of the old age home, they then went and appointed a professional service provider that is a qualified engineering services company that was supposed to assist the contractor in terms of finalizing the project. An amount of around 13 million was then paid towards this contractor, but no work was ever delivered by the service provider. So that also resulted in us issuing a material irregularity notification due to the possible financial loss that may be incurred due to those allocation of funds that were never used for intended purpose. Again, Chair, I'm going to get to that one when we go to the slide for material irregularities. In terms of the status of key internal controls, Chair, this should be read and considered in the context of the issues that I would have already highlighted in the slides, insofar as the qualification audit outcome, the indicator that was not included in the planning documents of the institution, as well as the compliance subject matters. At high level, Chair, we are reflecting that the entity did not implement adequate controls and adequate review processes over daily and monthly processing of transactions. That speaks to the application process for grant funding, wherein officials that were supposed to have picked it up earlier, that these applications should not go further for adjudication, but those systems failed, and as a result, that ended up with the entity allocating and approving funding for applications that should have been sent back. And also, we are highlighting, Chair, that the leadership did not exercise their oversight responsibility regarding financial and performance reporting. This is mainly due to the audit outcomes on the audit of financial statements, as well as the annual performance report and the compliance subject matters that would have identified. And again, we are highlighting that management did not review and monitor compliance with applicable legislation. This speaks to the inability to prevent non-compliances from reoccurring, as well as putting in place the necessary controls to curb the instances of non-compliance. So I'm going to now move into the next slide, which is similar to the internal controls that I've just reflected on, especially around the area of financial management reporting. We speak to proper record keeping, and that was most prevalent in the area of compliance in the case of the National Lotteries Commission as well as the National Lotteries Distribution Trust Fund on grant management allocations issues. And also on the daily and monthly controls, I think I spoke to that, so I'm not going to go through the controls in detail. But I think of importance, Chair, is to note that when we received the annual financial statements for these three entities within the NLC, NLPT's annual financial statements were clean, which means there were no material findings that were identified during the audit process, and thus ultimately received a clean audit outcome. However, that was not the case for both NLC and NLTTF, and because of the qualification which we expressed on the audit of grant allocations. So this is an area that needs attention on the part of management as they are preparing and finalizing the annual financial statements of the year 24-25 for submission by end of this month. The entities working on the revised population, which is the information for 23-24 as well as the information for the current period with being 24-25. So it's going to be important that management are diligent in the exercise of preparing annual financial statements, and also those that are charged with governance do play their part in terms of ensuring that they hold management accountable in terms of how they then went about preparing the annual financial statements. Again, we are reflecting the qualification area as well as in terms of financial planning, the underspending on grant funding budget by 957 million. So at high level, Chair, we are reflecting that inadequate quality of financial statements do tend to have an impact in terms of how the entity is managing and running its operations, and also puts undue pressure on the auditors to ensure that ultimately they identify and report on the credibility of the annual financial statements. And yes, this is our function. However, it is an expectation, especially because it's allocated to the management through the Public Finance Management Act, to ensure that they maintain records that are credible, to be able to reflect on how funds were utilized and how that translated in terms of their performance and etc. So Chair, we just want to again overemphasize that the entity needs to then be mindful of the process that is followed in terms of addressing those qualification areas, so that it alleviates and improves on those areas. And also inadequate financial statements do tend to have an impact in terms of the cost of the audit itself, because then that means the auditors need to do double the work to be able to express an opinion. And lastly, on the underspending, we are reflecting again that share that would ultimately result in the entity's ability to deliver on its mandate being impacted. And also that is mainly because where there's underspending of funding, that has an impact in terms of them funds that are allocated and made available for social projects, which are then meant to benefit the citizens of the country. Moving to the next.
So, sorry, can I ask a couple of stupid questions? So, what is NLC NLDTF? There's no legend here.
Okay, so the National Lotteries Commission is a group.
Right.
And the National Lotteries Commission being the parent to the two subsidiaries, and the first one is the National Distribution Trust Fund. The National Distribution Trust Fund is a fund that is established from the Lotteries Act, and what that fund is responsible is actually managing the grant making function. So how NLC generates revenue is that they get a percentage of the share of ticket sales from Ituba, and that is deposited into the coffers of NLTTF. From that budget, it is split, and then there needs to be a budget made available for the NLC to be able to run its operations, and also funding that's going to be made available for the grant making function. The National Lotteries Participants Trust is a vehicle that is used to then account for transactions coming from Ituba in terms of transferring funds that are for example, I think there is what we call unclaimed winning funds from the lotteries process. Those monies needs to be submitted to NLPT, and NLPT needs to keep it for a particular period. And I think the important consideration that needs to be made is that the regulations for regulating compliance also requires that all participants in the lotteries process interest needs to be protected. So in terms of then funds that are not being claimed for within this particular period, then those funds get deposited into NLPT, and then LPT runs with those processes. So those are the subsidiaries that exist within the National Lotteries Commission banner.
Okay, so thank you very much for that. That's helpful. So are these two, they are legal entities, they are juristic persons?
Yes.
Do they have their own internal arrangements? So are there Chinese walls between them, if I can call it that? Or how do they work? I want to understand in the context of who is supposed to do what. I just want to understand the accountability chain. So, for instance, is that trust simply a management structure that has got someone within the commission looking after it and some trustees working on a part-time basis, or is it a proper entity with its own structure, and therefore they are subsidiaries of a bigger structure? Would they, for instance, sit in the same building? So can you just simplify in that way? So if I understand you, those two entities are not just jurist or legal entities. They actually have structures, management structures within, which are intended to fulfill the mandate that you've just explained. Would that be correct?
Should I go first? Okay, so in terms of the National Lotteries Distribution Trust Fund Chair, it exists within NLC. It does not have employees. The responsibility to manage and run the fund is allocated to the board of NLC by legislation, which is the Lotteries Act. So almost we can call it a bank account. However, it is a juristic person because it's an entity that is established through legislation, and it has its own specific function. So whatever the management of NLC are doing within the ambit of that trust fund is through what is required by legislation. In terms of the National Lotteries Participants Trust, that entity chair is established through the license operating agreement, which requires ITUBA to establish that entity. It's managed and ran by a group of trustees, some of which are appointed by the minister, some which are appointed by ITUBA as well, to represent both the interest of NLC as an entity and that of the license operator being ITUBA at present. So it's a separate entity that is run outside of the NLC Commission. However, its establishment is informed by the license operating agreement, which requires them to establish that particular entity to run as a vehicle that is managing the processes relating to the license operating agreement.
All right, thank you very much. So let's now go back to the slide. So, because I now need to understand. So let me just, for completeness.
Yes.
So the second one, so the NLPT,
Yes, Chair.
right, the Participation Trust.
Yes, Chair.
Its trustees, there are two categories. The trustees appointed by the operator and trustees appointed by the Minister of Trade, Industry and Competition.
Yes.
Can you recall what the split is there? Is the majority appointed by the Minister, or you won't remember that off bat? Or is it 50-50? I'm just trying to... I'm trying to get a sense of
Yes,
who ultimately has a more influence on the on what happens there, or setting the the direction and workings of that institution. I know it's governed by legislation. What I just need to understand is it a case of the minister appoints 3 and the operator appoints 2? Or do you understand that split? You can check it if you can't remember off the top of your head.
Chair, I'll just look at it. I'll share before the end of the day, but I can't recall on top of my mind the split. But we'll get to that. I think I'll ask my colleagues to help me as well.
Okay. No, don't stress about it. Your colleagues can check in the meantime, so don't stress about that. So I now need to get to this slide. So the legend here of the 2 bars says green means unmodified, pink means modified. So I'm a little. So does this mean that the participation trusts books were unmodified, and the NLCs were consistently? Before audit outcomes, there was basically the outcomes were the same. Before audit outcomes, the participation trusts. Okay, let me put it to you this way. If those 2 bars were representing 2 separate organizations, I would follow this better. I'm struggling to follow this one. Can you just simplify what those bars mean?
Okay. Do you want to go?
Am I the only one who's battling here? I'm struggling to follow. So if you had to put the NLPT on 1 bar, 2 bars for NLPT and 2 bars for NLDTF, it would be easier to follow. Now I'm battling. Yeah, so can you just help the committee there?
No, thanks, Chair. So this slide, I do agree with you, Chair. Maybe splitting it, I think it would have made it a bit clearer. But the intention of the 2 bars is just that in the NLC space, it's not showing up, is to reflect to what my colleague was saying earlier on, to say, when the financial statements are provided for audit, are they credible enough for us to tick all the boxes without any adjustment, material adjustments being made to those financial statements? So what you see in other spaces, not at NLC, you will find that the picture will be pink. So meaning the financial statements provided for audit had material errors which were picked up by auditors.
No, we get that. So here's where I'm going. I want to know whether the NLPT has the same issues as the NLDTF or not, because it's not clear here. I get what the purpose of the graph is, because you guys show this with every audit, so the members understand it. What we want to know is, are you saying on a combined basis nothing changed? Is that what you are saying? Because that's what it appears to mean. Yeah, I don't know if you follow me. I get the purpose, what the graphs are trying to communicate, but you've separated the entities. Now we can't disaggregate them and find out which one does better than the other.
Okay, Chair, maybe let me start here. So NLPT and NLDTF are subsidiaries of the group that is NLC, and they have their separate audit reports, which then inform the audit of NLC. And that is because the annual financial statements, in terms of how they are prepared, there will be financial statements for NLPT, there will be financial statements for NLDTF, and there will be financial statements for NLC. And the financial statements of NLC are a representation of the whole group, including NLDTF and NLPT. What we normally call that in a technical language is that they are a consolidated set of annual financial statements representing the entire group. In terms of a separate audit opinion on the NLPT, that entity, we did not identify any material findings when the financial statements were submitted to us. Ultimately, they received what we call a clean audit outcome after the audit process. In terms of NLDTF, we then found that the entity had material misstatements on the audit of allocations of grants, and thus they received a modified audit outcome in their separate audit report. What then that resulted is there was an impact on NLC because the audit report of NLC is a consolidated and a representation of the entire group. Then the NLC had also a modified audit outcome because it is a group audit report which includes holistically the picture for all the entities that are within its management.
Okay. No, I think I understand what went on. So can I suggest this, and can we, the committee secretariat, please make sure that this happens? Let us modify this slide. Split it into three slides. Okay, split it into three. I'll explain just now. One, show on slide number 1, if you can, we can just show basically show the financial management and controls, the sideways graphs on their own, right? And then as a subset of that, you then show that for the NLPT, there were no adjustments needed. On the following slide, you show that for the NLC, NLDTF, this was the level of adjustments needed. And then on an aggregate basis, this is what it looks like. The reason I'm asking you to do that is so that someone who's not in this meeting, who is looking at this report, can make sense of it. Otherwise, it becomes a mysterious slide that is hard to. So can we make sure that this portion of the presentation is modified accordingly and resubmitted so that it's easier to follow in that way? What I would also suggest is that where you have impact, you also have another box with notes that explains what you've just said, so that people can understand when they read the documents later on, they understand what is going on here. Otherwise, you know, without the benefit of this conversation, it becomes difficult for somebody who's reading to follow. And everything that flows after, basically, this is so important that one of the things the committee will want to understand from management, what is different about NLPT in its governance and management that the NLDTF cannot achieve? We don't want to conflate the two when we're talking to them so that we can deal with a problem where it exists. Otherwise, you know, we'll continue to speak in cross papers. I hope you get me. So that's why the clarity was important for me in this portion. So thank you very much. You can proceed.
Thank you, Chair. Moving on to the slide for compliance with legislation. I'm not going to speak in great detail, Chair, on this slide because I would have shared the nature of the issues that were identified in each of the compliance subject matters. But overall, I would like to reflect that our assessment was that in terms of the movement, the entity regressed. And maybe I need to contextualize that because when we look at the year 22-23, there were about 12 material findings reported, while for the year 2023-2024, there are only 8 material findings reported. So one would want to say there is an improvement in the environment, and I think granted, that is the indication. However, our assessment was influenced by the fact that there's more subject matters that have, where we reported material findings compared to the prior year. So in looking at this graphic, we are showing that for asset management in the prior year we would not have had issues, but in the current period we then reported the non-compliance, which speaks to the requirement of legislation that the entity did not comply with in terms of consulting the educational institutions as well as non-profit organizations where there are laptops that are available for use, but then they went ahead and auctioned and sold those laptops without that consultation process. So that was the essence of what we were saying when we assessed the movement as a regression. However, Chair, it's worth noting that that requirement in terms of legislation has also not been scoped out for the purposes of the audit for 24-25. So the entity should be able to improve with regards to that area. Moving to the next slide, Chair, on this slide we are focusing at most on the audit of performance planning and reporting. Finding number 1, I would have already reflected in terms of the indicator that was not included in the annual performance planning documents of the institution. I think I've spoken at length on that one, so I'll move to block number 2. On block number 2, Chair, we are reflecting the achievement of the set targets in the entity on the different programs that they are reporting on that we had scoped in as part of the audit process. On the program for regulatory compliance, which is a program that deals with the institution's mandate insofar as the regulation of the lottery through ITUBA, as well as the functions that they then put in place and the measures they put in place to ensure that there is compliance with legislation in the manner how the lotteries is ran, and also that the interests of the public and those that participate in those processes are protected. Chair, out of 4 indicators, there was 1 indicator that was not achieved, and that is the Know Your Customer strategy for online lottery play developed. So the entity had an intention to work through its processes and try and gain insights which would inform the activities that they put in place to regulate compliance by better understanding their customers in terms of what are the strategies employed in other jurisdictions in terms of acknowledging and understanding their customers, as well as different other activities that are involved in terms of understanding their strategies. But when we completed the audit at the time, Chair, we noted that this strategy had not been developed and finalized, and as such, this particular indicator was not achieved. Maybe the entity will speak more at length in terms of what would have transpired in terms of the delays, but our observation was that it took a bit longer for the entity to develop the terms of reference which would inform the appointment of the service provider that was going to assist them with regards to achieving that on that particular indicator. Secondly, on program 3, Chair, the grant making, which is the function that the entity is responsible for around grant management and grant allocations. The entity achieved 67% of the planned targets. There were initially about 4 targets planned and reported on the initial APP. Then later on, the entity revised the APP and relating to 1 indicator. That then resulted into a total number of 6 indicators that they were reporting on around the grant making, wherein we found that 2 of those 6 indicators were not achieved, and that is the indicator around the number of strategic partnerships formalized and implemented for the research-based model. This is coming, Chair, from historically the entity's processes in terms of grant fund making around proactive grant funding, which was rather unstructured in terms of funding, proactive grant funding. There was no processes that were followed by management back at that time in terms of how they identify projects that need to be funded from this a segment of the legislation, and also what are the processes that needs to be in place. So now what the entity is seeking to do is establish a database of non-profit organizations with already all their compliance documents being in place, as well as understanding what kind of services they are able to deliver on, so that at the time when there's a need identified for or proactive grant funding, then they will already know that they will go into the pool, identify beneficiaries that are able to deliver on that particular function, and then consider them for appointment in terms of dispersing and running with this research-based funding. Now, the challenge around this was that the entity, again, was not able to achieve the particular appointment. At the time of the audit, Chair, the processes had been concluded, but unfortunately the SLAs between NLC and those beneficiaries had not been signed, and therefore the indicator was not achieved, because as part of their technical indicator description, they had indicated that part of them reflecting and reporting on this achievement, the SLAs would need to be signed by the time at year end, and that was not the case. with regards to the quality of performance reports before and after the audit, Chair, I must also reflect that the annual performance planning and reporting is done at a group level for the National Lotteries Commission. So there's only one set of an APP as well as the annual performance report. When we received it, there was a material finding which we identified, and unfortunately, management the nature of the issue was not something that management could have corrected, and ultimately, then the entity was left with a material finding which we reflected on in the audit report. Again, in terms of the impact on the lived experiences of the citizens, Chair, we are reflecting that about 75-67% of key performance targets were achieved on both the regulatory compliance and grant-making programs respectively, while about 64% of the budget was spent. And due to this unachievement, our understanding and our viewpoint is that the entity would not have been able to fully deliver on its mandate for the year due to these indicators that were not achieved. And also the non-inclusion of missing indicators is likely to result in legislated mandate not being achieved, because, Chair, like I would have articulated, the regulation is clear that the entity needs to adjudicate and process all application within 150 days. Now, considering that this is something that was not being tracked, monitored, and reported on, and also the entity could not be held accountable in terms of their performance since they were not reporting on the indicator, this would obviously have an impact on and how they were implementing their mandate. Moving to the next slide, which is slide number 9, Chair. On this slide, we are reflecting the messaging that we would have left the entity with after we had concluded the audit, and our messaging is grounded on the audit process in itself in terms of the issues and the areas that require improvement that would have noted. Again, Chair, we are elevating that there would have been grant applications that were approved and allocated funds, even though the applications in themselves did not meet the mandatory requirements in terms of the application process. When we look at the next box, we are explaining the nature of those mandatory requirements that would have not been in place. As an example, Chair, it is NLC's requirement that when an applicant is requesting funds for infrastructure-related social projects, there needs to be a proof of land ownership or proof of property ownership, and if in the absence of that, maybe there needs to also be a proof of permission to occupy the property. What that seeks to do is to protect the interest of the NLC, because grant funding is meant to benefit communities, not individuals. Now, in the event that it so happens that that grant funding is used to refurbish or build or construct infrastructures that belong to individuals, that intended purpose would not be achieved. And without these documents being in place, that means the entity did not confirm or was unable to confirm that this is indeed a fact, that the property in terms of its ownership belongs to the beneficiary, being the non-profit organization, and the non-profit organization will not be in a position to sell it without an approval from NLC. So those are some of the key messages that we left the entity with. I think another one where we would have observed, Chair, that one of the requirements is that if the applicant is a previously funded benefactor, this benefactor must have provided all the requisite documents in terms of the previous funding before they can be granted and approved for another funding for a different project. There are final progress reports that they need to submit, and in some instances we identified that these beneficiaries would not have submitted final progress reports on the previous funding which they had been allocated, yet they were given more money to do different projects. So with that being said, that means the entity did not confirm that those beneficiaries would have used previous funding for intended purpose. Second to that, Chair, the previously funded beneficiaries are also expected to submit those final progress reports and accompany them with independently reviewed or audited annual financial statements. So at times you would find that the beneficiary did in actual fact submit the final progress report, but unfortunately it's not supported by the independently reviewed or audited annual financial statements, which is a layer to give management of NLC assurance and confidence that what the entity is, the beneficiary is saying in terms of the final progress report that they are submitting is actually through a true reflection of how the funds would have been used. So with those not having been met, the entity was not supposed to process and adjudicate further applications and approve them for allocation, since the beneficiaries did not comply with the conditions of the grant agreement on their previously allocated funding. And we also identified an instance, Chair, where the application from a beneficiary would have requested for purposes of this example around 14 million. However, the adjudicating committee took a decision to award around 50 to 60 million or so. And the legislation does allow them discretion to be able to make decisions. However, our challenge with this discretion that was applied was that there were no project plans in place, due diligence or feasibility studies, or even capacity assessment to determine that, one, the beneficiary has the capacity to be able to implement grant funding at that scale, and also that this money is actually needed because with processes of construction, there's usually a certain due diligence that is expected to inform the value of the project. Now, without all these steps being in place, we could not with certainty make a determination as to whether it was valid for this funding to be allocated in excess of the amount applied for. We then further also, Chair, observed that out of the applications that were approved without all the conditions being met, unfortunately, some had already been paid, meaning the funds had already left the bank accounts of the NLC and then went into the bank accounts of the beneficiaries. What that meant is, in terms of the grant agreement, the entity had then forfeited its legal right to be able to withhold or withhold funding from those institutions until they have rectified and made it and confirmed that all the applicable documents have been made available, such that there is comfort that the money will be used for intended purpose. So those are some of the issues that we identified. And again, Chair, we are elevating the fact that an indicator relating to the application processing was not included on the AOPO, and also there were vacancies in the distribution agency committee members, and that resulted in underspending of grant funding by 36%, which I had reflected on the previous slide as 957 million. Furthermore, Chair, we then did also an analysis just to get insights in terms of the geographical allocation of how the funds are being allocated in the different provinces. We unfortunately found that at most the grant funding allocation is concentrated within the Gauteng province in comparison to other provinces, meaning the Gauteng province receives much more allocations compared to other provinces. And looking at South Africa's geographical spread, there's provinces like KwaZulu-Natal, Eastern Cape, Limpopo that are more rural and have without comparing, have needs for social development, such that members of those communities can benefit from the mandate of NLC. So we flagged that to the management of NLC to say there is a need for them to do more work such that there is equal benefits from their mandate from the different allocations that are made in the provinces. In terms of key infrastructure projects, Chair, we would have noted one of the projects that we visited that the beneficiary reflected on the progress report that they would have used money for the manner why they applied for it in terms of the intended purpose. But when we got there, we just found that there was minimal maybe grading done on the checks, but there was no reflection in terms of how the money was used. However, the money was no longer in the bank account of that beneficiary when we got the bank statements, and as a result we found that there are inadequate controls in place to ensure that the progress reports submitted by grant beneficiaries are accurate, properly reviewed, and included receipts and invoices that sufficiently support the expenditures. And this relates to one of the projects that we would have visited. With all the issues that we would have observed during the audit process, Chair, it is worth noting that we have also noted some visible improvements in terms of how the entity is running with grant funding management in the period that ended 31 March 2024. One such example, Chair, is that the entity is in the process of appointing infrastructure specialists that would then assist them with managing infrastructure projects from inception up until finalization. Previously, that is a function that is an activity that was not in place, and as a result, they were not better positioned to be able to assess if, in the first place, the projects that are being applied for are feasible, the entities that are applying have capacity to be able to implement them, and also when they go do site verification, when it does happen, that they are looking at the right things, because the officials that were performing those functions were not built environment specialists, whereas the specific skills that are required for you to be able to do monitoring in terms of infrastructure related projects. That is one of the internal control improvement that has been put in place. And also the entity is continuously working on improving its control environment. Grant funding policies have been updated. The standard operating procedures have also been updated. For example, now, before they actually award and approve, in fact, before adjudicating a grant application, there needs to be a pre-site adjudication inspection. What that entails is the official is there to establish if the NPO actually exists and has been running with its business since it was established. It's not a newly established NPO, and the people that are running, or the directors of that NPO, are people that actually registered with the Department of Social Development, have been in place for a while. And this is coming from an era where non-profit organizations were hijacked and used for purposes of running the projects that are reported in the media. Now they speak to the community members there as well as the directors to establish if the directors actually know why this NPO exists and what are the functions and the benefits, and also speak to the members of the community to understand that is there a need for this service or for this function that the NPO is applying for, and also do they know about this NPO in terms of its functions. I think this is also coming from historically events where the NPO would have been opened to run with maybe early childhood development, and then later on you find that it's running with health-related functions, which is not consistent with the reason in terms of why it was established in the first place. And those were some of the indicators that would have given an indication that maybe something amiss is actually happening in those spaces. And also in terms of project monitoring, previously that was done more on a sample basis. Now they monitor 100% of the projects post-adjudication, so that they can keep a track record of whether the funds are being used for intended purpose, and be able to intervene earlier in the processes should there be any areas that needs improvement. So that is a space where the entity has improved thus far. Going into material irregularities, Chair, I will today, as at the end of 31 March 2024, we would have issued 3 material irregularity notifications. One was reported in our previous audit report during 22-23, and 2 were issued as notifications to the accounting authority during 23-24. The first one, coming from the prior year, is around the construction of Mutewa Sports Complex somewhere in Soweto, wherein the entity paid a rent value of around 6 million, and during the audit, our observations were that there were progress reports that were submitted by the beneficiary. However, when we went for site inspection, we found that the area where the said sports complex had been developed was actually a dam site, and as a result there was a possible financial loss of 6 million, and in accordance with that we then issued the material irregularity notification. During the audit, we concluded that the accounting authority was taking appropriate steps with regards to addressing that particular material irregularity, and that is mainly because an investigation had already been concluded by the special investigating unit, and also a case had already been initiated or instituted. A case of both criminal and civil litigation had been instituted against the beneficiaries on this regard. So, Chair, and then we concluded that the entity had implemented the necessary controls in terms of addressing the material irregularity. The two material irregularities relating to Edumbe Old Age Home in KZN, at high level, Chair, we issued these two material irregularities, and the first one relates to the construction of the old age home, wherein the entity paid around 26 million for the purposes of developing this particular old age home. When during the audit, we made these following observations. One, in terms of the budget allocation, when the beneficiary applied, they would have applied for around 11 million, which was to be used for installation of certain items in the building once the construction in itself had been concluded. However, that payment was made in advance without the construction being completed. Secondly, there was an amount of 3 million allocated in this budget, which was to be paid in 3 tranches at the time when the old age home is operational, because it was for purposes of assisting the old age home with operations. This amount was also paid in advance, even though the construction had not been concluded, and obviously the operations were still not in place. And over and above that, there were variation orders of around 3.8 million, which were approved further on after the development had already started, and that was to assist the beneficiary to conclude the construction of the old age home. However, when we went for site verification, we then established that the site had been established by the contractor, and they left the building without security to prevent vandalism. And also we noted signs of poor workmanship, wherein the slabs had cracked and the building had hairline cracks as well, which would also raise questions about the safety of the property, even if it were to be completed. Now, the third thing which was observed by NLC when they went for site verification was that the project in itself is not feasible because of its geographical location from where the community is. So it was so far from where the community is, such that even if they were to go ahead and go finalize and complete it, there would still probably not be an uptake from the community and use, because it's so far from where the members of the community are. So we then raised the material irregularity notification and issued to the accounting officer and asked for them to respond and give us indication of what would have led to the MI, as well as share steps in terms of how that is going to be concluded. When we completed the audit, we had obtained a response from the accounting authority, as well as did the follow-up and also obtained a response with regards to that. Key notable observation was that the investigation in itself had been concluded by the special investigating unit, and also at the time the SIU was in the process of referring the matters to the National Prosecuting Authority for instituting both civil and criminal charges. And in terms of the consequence management, we had noted that most of the officials that were cited in the SIU report had either already been suspended, or also, for the most part, some of them had resigned while they were undergoing disciplinary processes from other prior allegations. So at most, to our knowledge right now, in terms of consequence management with regards to these MIs, is pretty much done because officials tend to resign before the actual process is actually concluded. However, the accounting authority did cite that in our correspondences that in the event that those officials reapply in public sector, those public sector institutions would be required to institute disciplinary proceedings, as it is something that they flagged in terms of them having resigned before disciplinary processes were concluded. What we then left in terms of what needed to be finalized is the issue around recovery of the potential financial losses that we had flagged. In terms of the beneficiary, I think the other key thing was that the SIU was still in the process of quantifying the actual value of the financial loss. So they had committed that they would appoint a quantity surveyor to go do a value for money exercise so that they can determine the actual value of the financial loss with regards to that 26 million which had been paid for a development that was never completed. On the second part of that particular development was the appointment of a professional service provider that was paid 13 million to assist the contractor to finalize the development of the old age home. However, the service provider then never performed any functions, and therefore we also flagged that as a potential financial loss. When we concluded the audit, we also said the accounting officer was taking appropriate actions in terms of addressing the material irregularity. This particular transaction did not form part of the scope of the SIU. However, it was then investigated by the NLC forensic unit, and they found that in terms of payments that were made, these would have been done without actually ensuring that this relates to the record of work that had already been done. And as a result, in terms of people that were implicated, that also was similar to the officials that were already identified by SIU. And over and above that, they had then referred that for further processes in terms of civil and criminal proceedings. Lastly, Chair, on this slide, in terms of what is left for us to be able to conclude and resolve on these MIs at the time of the concluding the audit would have been finalization of the consequence management process, which I have now reflected that based on our knowledge, the officials that would have been left in the process have also since resigned, so the process would ideally by now been concluded because the officials that were implicated have left the institution. In terms of recovery of the financial loss, the entity, with the assistance of the SIU, has, where applicable, already instituted the criminal and civil proceedings and or were in the process of instituting those at the time when we're concluding the process in itself or the audit in itself. So what is key that is left is for them to finalize the process of overhauling and improving their internal controls such that these irregularities can then be prevented from further reoccurring, and they can be able to run with their mandate insofar as proactive or research-based funding being implemented, since that has been there's been a moratorium since the 22-23 around the financial period. Moving to the next slide, which is the last slide, Chair, this would have been a slide where we are activating the accountability ecosystem and also just sharing the recommendations that would have left with the accounting authorities in terms of addressing the areas that need their urgent attention. One, on the top part, we are illustrating key root causes that needed to be dealt with as a matter of agency, and the first one is around the lack of accountability and inadequate consequence management, and that speaks to the non-compliances that we identified around consequence management in terms of how they are dealing with instances of irregular expenditure, as well as the inadequate controls and lack of proper reviews on allocations of grants. Again, Chair, this is because there would have been officials that looked at the applications, but somehow they let applications that should not have gone through adjudication go through adjudication, and ultimately that resulted in the entity awarding and allocating those grant funding when that should not have been the case. And also we are highlighting the issue of inadequate project implementation monitoring controls, where we noted instances of limitation around confirmation or confirming that monies would have been used economically for intended purpose at the time when we did site visits, and we communicated those limitation of scope to management. So as a start, in relation to consequence management, we recommended to the accounting officer that they need to establish a loss control function, and that is a function that will be responsible for conducting the determination test within 30 days for timely investigation of irregular expenditure. That will enable and empower the entity to be able to identify the root causes, improve on internal controls, and ultimately give reports to oversight bodies so that they can be held accountable in terms of how they are complying with the relevant prescripts and legislations. We also recommended, Chair, that the entity needs to implement proper controls to ensure that allocations of grant are allocated only and appropriately and in compliance with the applicable guidelines. And those guidelines are coming from different accounting policies within the institution, as well as the standard operating procedures. We also recommended that the entity needs to conduct project site verifications to ensure effective project monitoring and incorporate an element of unpredictability in their approach, so that they can better get insights that would inform whether monies are used for their intended purpose. And we also then recommended that the entity should thoroughly review the annual financial statement to ensure their accuracy, completeness, and fair presentation, to ensure that they are compiled or prepared in accordance with the requirements of the applicable reporting frameworks. We further recommended that there needs to be proper quality assurance processes and controls to monitor grantees' compliance with the provisions of the grant agreement, so that instances such as awarding allocations for grants that do not meet conditions do not recur. And lastly, in terms of the compliance subject matters, especially around procurement and contract management, seeing that these are repeat issues, we then recommended that there needs to be training of SCM officials to ensure understanding and compliance with SCM regulations and relevant legislation. And mostly, Chair, this is because in our observation, we would have known that the manner how they were applying the requirements of legislation, and also just the evaluation in itself, which is a simple function, was being done, where goals that are specified and articulated in the request for quotation were different compared to what they used when they were evaluating and adjudicating, or the allocation of points that resulted in service providers that did not achieve the highest scoring points being awarded those contracts. So that is my presentation. Thank you, Chair.
All right, thank you very much. Thank you very much for that. That was very thorough. Thank you so much. I just want to ask a couple of questions, because context is important. Can you recall when the board that is in place now was appointed, or when they took office? Can you recall?
Yes, Chair, but my dates might not be necessarily accurate to the point.
No, just maybe the approximate time in a year.
Yes.
Yeah, you don't need to give a specific date.
So the interim board would have been appointed around March 2022, if my memory serves me well. Then later on, those members that served in the interim board were then officially appointed as board members, with others being added around beginning of the 22-23 financial period. But I can also try and get dates for that to share with you, Chair, in a short while. But yes, that is the timeline.
Okay, so you said around the end of the 21-22 financial year, thereabouts.
Yes, Chair.
Which means the audit outcomes for that year would then have been for the previous. Can you please just go back to the historical slides? I just want to kind of place, because we're going to call them to come here, and we need to place accountability where it belongs. So 2020-21 was another board. 2021-22 was another board. 2022-2023 was the interim board, which subsequently the members thereof were appointed permanently, and then they added more in order to make it a full board, I would imagine, right? Okay, so then I get that. The second is just by way, how long have, let me put it, the question this way, were any of you involved in the audit of this institution for that entire period, or with the two different boards? Because I want to ask about the experience of cooperation and working with the entity. So in other words, were you present 2021, 22, 2022, 2023, 2023, 2024? Obviously you were 2023, 2024.
Yes. Okay.
Thank you, Chairperson. So I was not directly involved in the audits, but obviously I did engage with the board during that periods, and then with the two different boards. From history and memory, there was a lot of pushbacks in the previous board, from the previous board. So it was, let me just say there was a lot of pushbacks from the previous boards. Coming to the new board, there is better cooperation, there's openness, there's meetings. They invite us to meetings to come also and present and be part of at the senior level, at the audit committee meeting, and also when we do present to the board. So there is better cooperation compared to the previous board.
All right, thank you very much. So I would imagine, I mean, so from my reading of some of the remedial actions that are taking place, I would imagine that I'm thinking, let me start here and then work my way backwards. It would appear to me that it would be unwise to make much grant funding under what appears to have been a broken system that still needs rehabilitation, right? So in other words, you are the old board. All of these things that you are setting out that are supposed to happen were not happening. And if I was in another entity and I come from the private sector, a normal board would be like, we can't give out any more money under these circumstances because it's disappearing into a dark hole. Would that be a correct assessment, that a board that is doing its work, given the brokenness of the governance and the evaluation of applicants and the due diligence and so on, it would be imprudent to continue to give grants under those circumstances?
Thank you, Chairperson. So the majority of these findings came from the proactive grant application. So that means NLC or NLDTF actually would do research to see where there's worthy causes and where they should allocate funds to. When new board came in, one of the things that they did do is they stopped the proactive funding. They've continued with the application part where an NGO will come with their proposal, with the research, with their request, and then that would still have been continued. So that part continued, but the proactive part, which NLDTF was responsible for initially doing identification, that was stopped at the time the new board came in.
Sure, so I get that. So my understanding is that even that process was broken, or not. Was it working just fine before? I am getting to what we should ask them on the money not spent. And I don't want us to harp on the money not spent when if they had spent the money, it would have been stolen, as we had seen. You get where I'm going. So I'm not trying to catch you out. I am trying to understand what was broken. So there are these two processes. People can reach out and apply. The assessment of those was broken. The proactive part, what is your assessment of that? Was it working fine? Was its systems fine? Or were they also problematic according to your observation?
So, Chair, in my honest opinion, it was prudent for the board not to make the grant allocations when the internal control environment has not been successfully improved to a par. And however, us highlighting the understanding is coming from an understanding that in their planning, they would have budgeted that this is something that they're going to deliver on in that cycle, meaning they allocated themselves a particular period in terms of overhauling the control environment and concluding that process such that they are then ready for them to be able to disperse research-based grant applications funding. And also that has an impact in terms of the lived experiences of the citizens. From the projects that they normally fund, I've seen things like early childhood development centers being established in those communities. So the longer they are taking in terms of concluding the process of improving the internal control environment, the longer it's going to take them to be able to deliver on their mandate. So it's important that we balance the messaging in terms of, yes, we appreciate or we see what the entity is doing in terms of improving the internal control environment, but there's also an agency to do that within the time frames that they would have allocated themselves, because I take it there would have been an assessment of how much work needs to be done, how long that is going to take, and then when are they going to be ready to start awarding. But in the event where the system is not ready, it is prudent that they do not make the awards because, again, they do not want to experience what would have transpired in the past.
All right, thanks very much. No, so I'm asking this because the committee sits with a conundrum always, which is that some entities will say, we've met 70-80% of our objectives. We said we're going to spend X amount of money doing the following things, and people are proud that they didn't send money back to Treasury, but the actual impact on citizens is also not there. So the money is spent, you've ticked that box, you've chosen the entities, but the money hasn't achieved that. So that's on the one hand. On the other hand, there is a need to kind of deliver in the right way, and I fully appreciate the balance that you're talking about. So, and this is a general comment. It's not just for you. Mr. Tukubu is listening here. So the reason I'm asking these questions is that context is important for the committee so that we can then have the right conversation with the board and the management when they come here, and they're coming soon, and you guys will be part of it. So I'm not trying to fry you. I am trying to get to a point where we are able to work out as a committee that, look, these 5 things were really broken. And that has had an impact on their ability to then process funding onto institutions which continue to wait. And as a consequence, you now have this money that remains unspent. That's a complete story. When what we see is the money should have been spent, it has not been spent, it's another story which is outside of context, which is they were sitting on their bums and not doing what they, you know what I mean? So, and we work with a lot of institutions that are in trouble, and assistance in terms of that context is also important. So one of the questions we will ask management, because it's not your baby, we will ask management, is the timelines for fixing all of this, appointing people into positions and so on, working on policies. We will have that conversation with them, but this segment of the questions is important for that reason. Otherwise, we are none the wiser. So please don't worry. I'm not criticizing. You get what I'm trying to get to. Okay, all right. So I'm not. So the final question for me is is this, and then we will take a break because I just want us to get to context. So the committee staff have assisted me just now with the composition of the trustees. So in the participation trust. So interestingly, there are 5. 1 is from Ituba, 1 is appointed by the minister, 3 are independent. And that tells you a story in terms of your experience with the auditing. Whereas those that are appointed by the minister appear to struggle, right? And it's a comment I'm making because it also helps us, because typically we invite the minister as well. And then we can have the conversation with the minister about the process, the rigor, whether there is rigor in appointing people into the one. Because on its face, what I'm seeing is that when you've got more independent people, things appear to work better. Where you've got people where the political principals have discretion, you guys don't have a good experience with that, and it's a job of the committee. So you don't need to make a comment on that. The last question I have is that, have you had opportunity to evaluate the extent to which the systemic changes have been put in place? In other words, do they tell you this is the number of policies that need to change? This is how far we are in changing those policies. There's a process. So I'm just trying to get a sense of the engagement with the board, because clearly standard operating procedures, you said, are being changed, policies are being changed, etc. People are now going to inspect whether, the thing that the people are saying is it close to the community and so on. All of that's a good thing. What I'm asking is that, do you have an opportunity to assess whether on that front they're making progress? This is why it is important I'm asking the question again. Because if that's slow, there is going to be underspending again. You get me? That's where I'm going with the question. So what has been your assessment, if you have, and you don't need to give a specific number? But it's really a qualitative observation rather than a quantitative one.
Chair, for the current period, we are still in the process of making that determination and assessment. And our plan is to go deeper and look at the actual documents in terms of what are the improvements that they are putting in place, so that we can make an assessment of whether those are adequate for them to be able to deal with the issues that are coming from the history. So I do not have a direct answer. However, I would have already noted that even at the time when we were concluding the audit, there were certain key improvements that would have been made. One such factor was they were struggling with the development of an adequate fraud prevention framework, and mostly because they didn't have a chief risk officer that is skilled and having a broader understanding of the risk management processes. That position was filled beginning of the financial period, 24-25 period. So my expectation is that when I go back, now they should have adequate fraud prevention plans in place for them to be able to deter, prevent, and prevent reoccurrence of the irregularities that would have occurred in the past. Secondly, we are in the process of assessing the progress that have been made by the accounting authority in addressing the material irregularities, and as part of that, they also report on the progress they have made in terms of improving the internal control environment. We've taken the opportunity to also just drill down into detail in terms of what is it that is actually key, that is outstanding. I think the key one around the Motewa Sports Complex would have been our time frames in terms of resolution of MIs is usually around 18 months. So we wanted to look into, are we in a position to start resolving the MI considering that they would have done everything that we'd have expected out of them, including the investigations, recovery of the losses, improvement of internal control environment, and etc. And the one key part that was now remaining for us is to conclude if the controls have been improved to a point where we are comfortable that they are addressing everything that needed to be addressed. So that process is still unfolding, Chair. So I cannot make a pronouncement that there is progress, but we are in the process of making that assessment. Chair, if you will indulge me, I would have committed that I'll check on the issue of appointment of the board members. I have a confirmation that the interim board was appointed and installed in March 2022, and then they were officially appointed in 2023, 1 May 2023. And then on the second part, Chair, I acknowledge that you said we don't need to respond to the independency of the governance structures at NLC, but I think it's important that we correct or try and reflect on the independency of the board members and the audit committee members. Majority of the audit committee members are independent executive directors. There's only one official there's only one director that is an employee of the DIC, and as such is not an independent executive director. The rest, they are all independent in the audit committee, and the board as well, they are all independent members because they are not part and parcel of the running of the management processes and etc. They are not involved in government, or historically some would have been in the space, but at present, now that they are serving as board members, they are independent executive directors. Thanks.
All right. No, thank you so much for that. Members, the time is what, 10:43. Shall we take a 15-minute break, and then we resume at 11? I won't say 10:58. I won't be that pedantic, but let's resume at 11 sharp. Thank you. Honourable members, shall we resume? Thank you very much. We'll open it up for questions. We will take 3 members at a time, and I'm going to start to my left, Honourable Beasley, Honourable Neil May, and Honourable Bila, and then we will work our way up to the end here. So let me accord you an opportunity.
Thanks, Chair. So I'm just going to start off with a comment first. I think the AG sums it up perfectly here when they say lack of accountability and inadequate consequences. And I think this applies to every entity we look at, that there's just a lack of accountability and inadequate consequences. And my concern for the NLC is that it's just so badly captured. And Chair, you were mentioning it earlier. It's been so badly captured by the corrupt. And I just wonder if it's going to be difficult to unwind, because it's not only on the grant side, it's also on the expenditure side. I mean, expenditures ballooned there over the years. It's quite interesting. I was a member of the distributing agency there 20 years ago, part-time. When I was there, the cost to grants was 5%. It's now 50%. So it used to cost 5 cents in every 100 Rand. It's now costing 50, so that it's just ballooning. So the amount of good work that the NLC is actually doing, it's actually doing very little good work. And as such, my recommendation to the Minister would be to unwind it and start it fresh, because I just think, as I say, it's just so badly corrupted. But some specific questions. How many site visits does the AG actually do? And what percentage of them are good? And it's easy to see a construction site to see if it's not. But when somebody's put money down for food, etc., I mean, do you go into that detail to see whether there's actually, do you guys actually do site visit yourself to the beneficiaries? Don't rely on the NLC to do it, but do it yourself. And then in terms of the SIU investigations, if you can just, obviously it does have an impact on your audit. If you can just let us know what SIU investigations are taking place. And one of the key features that impacts on the ability of the NLC to operate is the distributing agency members. But my understanding is those people are appointed by the Minister. And the board gets hammered on this because they can't do the grants in 150 days. But if they don't have the distributing agency members to actually do the work, then the work can't be done. It's physically impossible. So I don't know if you can just talk to that, and maybe it's a case that we're hammering the board and we're giving, the new board of the NLC, giving them a whip because of this 150 days. But it's not their fault if they're not given the staff to do it. And if it's appointed by the Minister, it's the Minister's problem. And then, Chair, you mentioned something about independent. I can't see there's any independent person here, because who ultimately appoints the board members and the trustees? Somebody appoints them, and it's not the private sector. It's got to be. So I can't see any of them are independent. And then just a big concern for me is we focus so much on the grant side that we don't look at the expenditure side. And as I say, it has ballooned. I mean, how much work has the AG done on the expenditure side? And I know there were some concerns some years back about the lawyers that were used, and the current Minister, Lamola's legal firm, there were concerns raised about that. So is it something that you guys look at on an ongoing basis, just on the expenditure side? Because I think we focus just so much on the grant side. But as we know, profit and loss is your assets and your expenditure. Thank you so much.
Thank you. Honourable Neil May, over to you.
Thank you. Good morning. Good morning, Chair. Good morning, the team from the Auditor General, and to my colleagues here present. Chair, the material findings on compliance. The dashboard shows consistent material findings on compliance with legislation across all 5 years. Can you share with us what specific legislative requirements have been repeatedly violated, and why the NLC failed to address these issues despite ongoing audit findings? Furthermore, what enforcement actions has AGSA recommended to ensure compliance? The second question is that your presentation indicates material findings on performance reports for 2023 to 24 and 22 to 23, but none for 2020 to 21 and 2021 to 2022. What caused this regression in performance reporting credibility? And how does AG assess NLC's ability to implement corrective measures to restore credibility? Chair, my last question would be on the qualified financial statements, and that is the financial statements for 2023-24 remain qualified due to grant allocation issues, given that 957 million of grant funding budget was underspent. Now, I know you did speak to us about that, and you did say that it was was put on hold during that time so that the compliance issues could be addressed. How has the AG done an impact assessment of this on beneficiaries, and has the AG recommended specific actions to address this underspending? I did hear you mention that the board was busy. Chair, there was another aspect that I also wanted to mention, and that was, I think most of us, is the AG aware of any legal professionals or law firms that were specifically identified? So this is adding to my colleague here on the left of me, that were specifically identified during audits as having facilitated or overlooked the mismanagement of lottery funds. And then the last question was, what actions has the AG taken or recommended against law firms implicated in the misuse of funds, especially those involved in conveyancing or internal investigations? Thank you.
Thank you. I thought you meant the colleague to your right. Are you worried about Honorable Bila being, even before she has spoken, you already saying...
Chair, it's to my right.
Thank you. Honorable Bila, over to you.
Thank you so much, Honorable Chairperson. Good morning, everyone. Let me start by appreciating the presentation by the AGSA team. My first question is on slide 6, which is about the compliance with legislation. On your presentation, you have said you note a decrease in material non-compliance findings from 12 in 2022-2023 to 8 in 2023-2024, which is commendable. Now, can you tell us what specific areas of improvement contributed to this reduction? And does the AGSA consider this improvement sustainable, given the persistent issues in grant management and financial reporting? Second question, Honorable Chairperson, is on procurement and contract management, which remain areas of non-compliance in this entity. Given the recurring nature of these issues, what specific weaknesses in NLC's supply chain management process have been identified? And has the AGSA recommended any structural changes to address these weaknesses? Another question, Honorable Chair, is on irregular expenditure. You highlighted in your presentation that irregular expenditure was not investigated and effective steps were not taken to prevent it. What is the total value of irregular expenditure identified in 2023-2024? And has AGSA recommended any consequence management actions to hold responsible officials accountable? The last question is on the AGSA pertaining to the PAA. Given the recurring nature of material non-compliance, irregular expenditure, and unresolved material irregularities across National Lotteries Commission and many other audits of AGSA, how does AGSA ensure that the expanded mandate under the Public Audit Act is effectively enforced to prevent repeat findings? Why specifically have binding remedial actions or certificates of debt not been more widely applied to hold accounting officers accountable for financial losses and non-compliance? On the certificates of debt for financial losses, the PAA provides AGSA with expanded powers to address material irregularities and enforce accountability. It further empowers the AGSA to ensure certificates of debt to recover financial losses resulting from material irregularities if accounting authorities fail to implement remedial actions. However, in your presentation, you highlight 3 material irregularities resulting in an estimated financial loss of 45.8 million on slide 9. While investigations were conducted and disciplinary hearings initiated, there is no indication that AGSA has issued certificate of debt or recovered these losses. Is there a reason why the certificates were not issued? Thank you, Honorable Chair.
Thank you very much, honorable members. Let me hand over to the AG team to deal with those questions. Thank you.
Thank you, Chairperson. I'm going to respond to 2 questions, but I'm going to ask Apanduli to respond to the majority of them because it's closer to the work there. And maybe, Siswe, if you can look at the last question around the MI process. Yes, if you can look at that one. So, Chairperson, Honourable Neil May did ask about whether we're aware of legal firms that were identified during the audit that overlooked mismanagement of lotteries funds and what recommendations we would have made to them. I think from the AG side and our process side, it's our responsibility to express an opinion on the financial statements, compliance, and the performance information. So when it comes to the legal firms and the law firms, I mean, in the expenditure side, we will consider whether the payments was valid, accurate, whether there's evidence, whether management would have signed off. So in the normal audit process, we didn't identify law firms that overlooked, you know, the management or mismanagement of lottery firms. That we didn't identify through the audit process. So as a result, there wouldn't have been necessarily any recommendations from our side on that. As I said, Apanduli will talk to the expenditure because we do audit expenditure on an annual basis, and maybe just highlight some of the findings that we've identified there and the focus on expenditure when we audit it. But through the work that we've done, we didn't identify specific law firms. I think maybe through the work that NLC themselves did, because once some of these findings came out, they did do investigations, also based on our material irregularities. They did investigations. SIU did investigations, so they might be in a better position to indicate whether there's specific law firms that has been identified. There was one. In terms of the irregular expenditure for 23-24, so Apanduli is looking in the file just to make sure about the amount that was disclosed in 23-24. But in terms of the recommendations for consequence management, so Treasury issues guidance, and there's a framework that says that as soon as irregular expenditure has been identified, it's upon management then to make sure that they do an investigation or they assess the root causes for the reasons for the irregular expenditure. They identify the responsible people, and then they start a process whereby they recover. So our recommendation would have been in line with the guidance and the framework from National Treasury to say there is irregular expenditure, there must be consequence management, and the consequence management can only be implemented once there was an assessment to understand why there was irregular expenditure, who is responsible, and then to recover and to correct the internal control environment. So, Apandule, if I can hand over to you for a majority of the questions. Thanks.
Thank you, Chair. I'm going to start about the question in terms of how many site visits do we conduct. Chair, we do not place reliance on the monitoring that is done by NLC. We do independently conduct our own site visits based on a sample basis. And noted, Chair, that would usually be a small fraction of the total number of the projects that are being implemented through grant allocations funding. I think in the prior year, they would have reported in their annual performance report that they conducted about 3,000 site visits throughout the year. And with the limited period we had, we conducted around 30 to 40 site visits independently as the audit team. And our approach in terms of conducting those site visits is also unpredictable, wherein we do inform management that we are going on site visits, but we don't tell them specifically which beneficiary we're going to be targeting, so that there is no compromising that process in terms of maybe putting documentation in place for purposes of the audit process. So we catch them, or we conduct the visit without the beneficiaries expecting us and without also the knowledge of management. We would just, as courtesy, inform them that we are going out on site visits, and then we do conduct those. And obviously the evidence then would have pointed out there are instances where we could not have confirmed that money was used for intended purpose because either the supporting evidence was not in place, or the assets that were purchased using those funds were also not available for us to verify. The member also asked about SIU investigations that are taking place. At large, there is a proclamation which was approved by the President a couple of years ago, which covers the period up to some time at the time when the proclamation was published. If my memory serves me well, that's around 2019, 2020. And then the scope of the investigation itself covers the grant allocations that would have been allocated and dispersed at that time. To my knowledge, the SIU is also working on extending the scope to cover other projects that would have been approved and allocated after that period, so that there can be a holistic view in terms of the issues that would have happened post facto, because the officials and the board members that would have been responsible for running the entity would have still been in place up until the period when the interim board was then installed. In terms of the appointment of the distribution agency committee members, the member chair is correct. That is a function which is conducted or is the responsibility of the executive authority. So NLC board members and management are not in a position to fill in the vacancies. They're going to require or need assistance of the executive authority to be able to fill in those positions. How much work we have done on expenditure. We have conducted a full-scale audit using the HSA methodology on expenditure, wherein we perform procedures to confirm that expenditure relates to goods and services that would have been received by the entity, and it's also in compliance with the applicable standards and etc. And we did not identify any issues. The member would have also pointed out that the expenditure has ballooned over the years. Chair, I will admit that this is not an exercise that I've actually conducted in terms of assessing that, if that is true, and also the reasoning behind it. So with your indulgence, I'll request that we provide that response in writing. In terms of material findings on compliance, Chair, I may not be able to quote the specific sections from the Public Finance Management Act, because the regulations as well, the National Treasury regulations as well as the legislations that are used to formulate the procedures that we perform around compliance management are emanating from the PFMA. And one of the one of the sections in the PFMA requires the entity to adequately prepare annual financial statements in accordance with the applicable financial reporting framework, and that is the legislation which would have triggered us reporting a non-compliance because the entity in itself obtained a qualified audit opinion on the audit of financial statements. Insofar as expenditure management is applicable, there is a section that requires the entity to prevent irregular expenditure, and there is also another section which requires the entity to ensure that funds are used economically, and that is to say funds are used for their intended purpose. So those sections are what would then enable us or empower us to develop procedures to test and confirm if those particular prescripts that are talking to those specific terms have actually been met. And in terms of procurement and contract management, the National Treasury at large would issue different instruction notes, including the National Treasury regulations, which speak to the different application of the regulations and in terms of procurement and contract management, in compliance with the section of the PFMA which talks about procurement that is fair, equitable, and transparent. So from there on, one of the requirements is that the service providers or the companies that are appointed in terms of awarding requests for quotations and tenders must be compliant with the requirements of tax at the time when they are awarded, and that empowers us to then look at the Central Supply Database Report, which interfaces with the systems of SARS that would be able to give us information about whether this particular entity that was awarded would have been compliant with, would have been in good standing in terms of their tax matters at the time when the award is made. And also the different legislations which talks about allocation and calculation of points relating to these processes are also coming from the legislations that assist us to design those procedures. But I don't have the specific sections, but I can always go back, Chair, when I do the written response and include those particular sections. In terms of compliance with legislation, movement, in terms of the non-compliance, in terms of, Chair, grant expenditure management, we have not noted an improvement. In terms of consequence management, we have not noted an improvement. The improvement in itself is more on the space of supply chain management. The number of paragraphs or the number of findings that would have included in the prior year have reduced in comparison to the current period. And that is mostly because in the year 23-24 fully there was a CFO, there was a commissioner, and they would have implemented some activities to try and review quotations as well as the tenders, and that assisted in terms of them addressing some other non-compliances. I think another key one would have been an issue that the members spoke to around the appointment of a panel of legal counsel or legal service providers. And then the board as well as management took a decision to disband that particular panel because it had been found to be non-compliant due to the issues that were raised in 22-23. And for as far as they could, they then appointed new legal counsel to represent them on new matters. However, there were non-compliances which we still reported relating to some, or findings that we raised relating to some, because for continuity they were somewhat compelled to continue with some of the representation because it would have costed them more money to go out and appoint new people, and as a result they still had findings. So in a nutshell, what would have assisted them is the appointment at executive level, and that executive management team putting in place certain review processes to try and manage the issue of SCM. Unfortunately, some still reoccurred, and that was because the senior management position at SCM was still vacant throughout the period. It was filled when we were starting with the audit, which was after the year end. So we anticipate that for the 24-25 financial period, there should be further improvement, considering that there was an incumbent in that position for the duration of the financial period. In terms of specific weaknesses that we identified, in our observation, it was the interpretation and application of legal prescripts insofar as the evaluation of the request for quotations as well as the tenders where we identify issues or instances where in terms of the procurement plan, there would have been a clear undertaking that the entity expects to implement backup solutions due to the issues of load shedding across a number of offices in the entity. Now, when the time came, instead of the institution following an open tender process because of the value of those backup solutions collectively, the entity opted to then go through requests for quotations, even though they were above the threshold for quotations, and we raised that as an issue of splitting of orders. And second part of that was a historical issue coming from the past where, as part of our assessments, we need to select multi-year projects or multi-year contracts that would have still been in place at the time when we were conducting the audit and also were appointed or awarded following a deviation process. Unfortunately, the entity wasn't able to provide us with evidence that we could use to confirm if proper procurement processes had been followed and there was compliance with legislation because the document was not in place, and that is an issue of proper record keeping that is coming from records that management are indicating that in when they came in would have some documentation would have been missing, and as a result they were unable to provide us with that information. I'll leave the PAA question to my colleague. In terms of the value of expenditure, I'll add just after he speaks to the MI process. Thank you, Chair.
No, thanks, Chair. So on the question of PAA, it is correct that the office has been given powers to, among other things, issue a certificate of debt. So normally it goes through a stage process where when we do our audit, and part of it's through the audit of compliance, where we need to connect the non-compliance to the impact, whether there was financial loss. In this context, I'll only use the example of financial loss. So whenever we do the audit of compliance and other audits, we do check that the non-compliance resulted or is likely to result in a financial loss. So once we identify that, then we issue a notification of material irregularity to the accounting authority to take note and implement processes to address this material irregularity. And then we give the accounting officer that space to run through that process. And then we take stock and check in whether the actions that are taken are appropriate in the circumstances. And then if we conclude as an audit team that the actions that are taken are not appropriate, then we move to the next step where now we include the recommendations in the audit report for the public to see the recommendations that we recommended to management as to how they need to address the material irregularity. And then when we assess, after giving an accounting officer a reasonable time to deal with the recommendations, if we conclude that they are not appropriate, then we issue binding remedial actions, which we include in the audit report. And then if the remedial actions are not addressed, then we go for a certificate of debt. So it normally goes through a process to give the role players time to address the material irregularity in these various spaces. So in the context of NLC, when the audit team was auditing in the prior year and the other year, they did identify these 3 material irregularities where they connected the non-compliance with the impact, which was the financial loss. And they gave the accounting authority, the new accounting authority, time to address this material irregularity. As at the end of last year, which is 31 March 2024, the conclusion from the audit team would have been that they were happy with the processes that the accounting authority had taken. Some of it was they've done investigations. There were elements of improvement in internal controls through updating of policies, and then consequence management processes were initiated. So as my colleague indicated earlier, that currently now they are evaluating whether, as it now, are we happy overall with the actions taken by the accounting authority? And now this links to the question from the member as to why then the certificate of debts for these ones we haven't issued. So should the audit team, when they finalize the current assessment now, conclude that, for example, the actions were not appropriate enough, then they will move through these various stages to give the accounting office, accounting authorities space to try and address, and then go for a certificate of debt if through this various assessment process we still concluded that actions are not taken. So these expanded powers were designed in a manner to sort of give the role players time to try and address, and then for us to make a conclusion on that. So, BL, I'm not sure if I left something. Thanks, Chair.
Chair, if I may, I just wanted to submit that the value of irregular expenditure as at the end of 31 March 2024 was 44 million in comparison to the prior year, which is the year ended 31 March 2023, where the irregular expenditure was 94 million. Chair. And then one last question that I had not responded to is...
Sorry, may I ask, so how much of that was new irregular expenditure and how much of that was continuing? I understand that if a matter is still live, it continues until it is cleaned out of the system. Do you know, or was it... If you can't remember, you can come back to it later. So maybe just let the members ask more questions and your colleague can assist.
Thank you, Chair. Yes, would like to maybe look at our files to try and contextualize that. I do not have an answer straight off the bat. And the last question I would like to address is around what caused the regression on the reporting of the performance management reporting. So I'll speak for the year 23-24. My viewpoint on it, Chair, is that there was incorrect understanding and application of the performance management reporting framework. So management's positioning was that because we're not going to achieve the target, then let's simply remove it from the annual performance plan. But that is not correct. The framework speaks about them not prioritizing certain functions if there's a reason, a justifiable reason to do so. Now in their case, because grant making is one of their key mandates, there's never going to be a year where they are not prioritizing grant making. It's happening. Every year they are receiving applications and they are processing applications. So they should still be in a position to reflect how they performed against the regulation. And the framework also gives them a space and opportunity to explain where indicators are not achieved and contextualize why they would not have achieved. A member correctly pointed out that the appointment of DA members is a function of the executive authority, which management and those that are charged with governance alone.
What is DA?
Sorry.
Hey, we're looking at Honorable Isaac here and we are thinking, yes, the DA captured the institution.
Apologies, Chair. I mean the distribution agency committee members. So so the appointment of these committee members that are responsible for adjudication is a function that is allocated to the executive authority, and that means the board and management of NLC alone cannot fill in the vacancies. They need the minister to independently appoint so that the structure's independence can remain intact. And of course, that would have then had an impact in terms of how they performed against the target. So that is something that would have been understood by everyone in terms of what were their shortcomings. So instead of just removing it altogether such that there is no transparency in terms of how they are performing, and as oversight you have no view in terms of where they are and what they need to be assisted with, and if maybe you need to nudge the executive authority in terms of expediting the filling of those vacancies, that is something that then becomes a challenge if they are not reporting fully in terms of their mandate and the regulations that they need to comply with. While in the prior year, the nature of the finding was different because it was just a matter of this particular indicator that they had set up was not defined properly, so that they are able to measure it adequately and also determine in advance what kind of documents needs to be in place. So it's a matter of just consistent understanding and application of the framework, and it's a small issue, Chair, that I believe with just the right level of investment, they would be able to turn around. I would have noted when we were reviewing the 24-25 period that this indicator there's actually been brought in, so that is commendable on the management's part, that they are responsive to our recommendations and including key indicators in reflection of their mandate in the annual performance plan when there is an issue that has been raised and also a recommendation issued to them. Thank you, Chair.
Thank you very much. I'm going to come to you, Honorable Neil May. I just want to say on the 20th, next week, that is, so the day before budget, we will have a detailed presentation by the SIU on the same. So we will get a detailed update just for the assurance of the members, and then the Lotteries Commission will come as we normally do. Honorable Neil May, your finger was up to say a small matter that you want to deal with quickly as a follow-up.
No, thank you, Chair. Chair, I'm trying to get my head around this, and I'm trying to connect the dots. I'm trying to work out the kind of money that we are dealing with. Nowhere do we actually have what kind of funds does the National Lottery board have, So, for instance, what percentage do they get from Ituba? Because if there's a misappropriation, which is common knowledge, of 1.4 billion, which is being looked at by the NPA at the moment, where in these figures over the years do we actually see that amount that is unaccounted for or misappropriated? So I'm trying to look at for instance, the financial losses. There are quotations above the threshold, those amounts. How much was those amounts that were above the thresholds that was non-compliant? There are records missing, which we know, no supporting documents. So there's 1.4 billion misappropriated. What kind of money does this fund hold, and where in the statements over these years do you actually see this kind of loss, which is what the MPA are busy investigating? So that is the kind of thing I wanted to see numbers in the statements, and if there's any way that one can look at the kind of numbers that we are looking at. Thanks.
Thank you. No, can I give Honorable Pillay also the follow-up?
No, it's not actually a follow-up, but there's something that I've not mentioned or I haven't asked regarding the missing or the omitted indicator. That is related to adjudicating applications within 150 days. And this, to me, it clearly undermines transparency and accountability. So I just want to check if it has been assessed by AGSA whether this omission was deliberate or it was an oversight. Thank you.
Okay, thank you. No, we'll take the next three members together with that. So I'm going to give Honorable Nondenja an opportunity.
Thank you, Chair. Let me start with welcoming the presentation by the AGSA team. My question is on the allocations where those who don't deserve are the ones who are getting, where the guidelines are not followed. I would like to know that, in your opinion, is this based on the lack of capacity, or deliberate mismanagement, or blatant corruption? Or is it related to the high vacancy rate? You are saying that on the 3 material irregularities, Muteo Sports Center and the two of Edumbe Old Age Home, there were investigations. I would like to know if are there any possibilities of recoveries? And also, you also stated that some of the identified culprits left the institution before consequence management and all that can kick in. Are there any civil cases that are opened against those people? You are saying you pick, there is some level of improvements that was identified by HSA. But I would like to know, because when I'm looking at your slide 6, I'm looking at stagnation of 4 areas and a regression on the asset management. Wouldn't that have really put off any improvement that you might have picked up, or was this part not part of what you were looking at when you were identifying the improvements? You are saying the NLC is focused on Gauteng. Where are they based? Are there offices in Gauteng, or do they have offices across the country? And I think in one of your slides, you highlighted the training of supply chain management officials. Do you really believe that this would assist? And okay, I heard what you said about the certificate of debt, where there must be some financial loss that is identified. But when you look at just the 3 irregularities, material irregularities, there's a lot of financial loss there, unless my glasses are not showing me the correct thing. Maybe I'm looking, I need to go and get them redone. Because I think based on that, I'm starting to wonder if the AGSA is not shy on applying the additional powers that are given to you, because seemingly, I don't know what really guides you. I hear that you are saying you are going to look at this, but I would love to know if there is a time period or some guideline that says when it reaches this point, we have to issue this certificate of debt. At what point do you really do that? I think I will pause there. Thank you, Chair.
Thank you, Honourable Skosana.
Thank you very much, Chair, and good day to everyone. No, we appreciate the briefing by the AGSA on these issues that relates to the NLC and their audit outcome. Chair, with regards to the issue of underspending of 957 million rands, I think I've had a response that it would look like it also relates to the shortage of distribution agents, which their appointment, I think they also relate to the role that has to be played by the executive authority. So from your engagement with the board of the NLC, how far are they in terms of engaging the minister in relation to making sure that they have enough distribution agent to make sure that they are able to spend their budget to the fullest? Because, I mean, it's a very huge amount of money to be underspent by this very important institution. And secondly, has the HSA recommended how NLC could, amongst other interventions reallocate these funds to ensure that beneficiaries receives the intended support. My third question is with regards to the vacant position of the COO. Because from your slides, it shows that this position of a COO has been vacant since August 2022, which means it's almost 3 years. We're just 3 months away to a 30-year anniversary of the vacancy, of this vacancy. So what are the contributing factors to that? Why is the NLC not appointing the COO? Because in our view, this is a very important position. Why are they not filling this particular position? And then with regards to the issue of the need that we have indicated, that is, there's a need to establish a database of NPOs for proactive grant funding. I think we agree with you on that, but then I'm just puzzled as to an institution as big as NLC that provide funding to NPOs and stuff. It doesn't have such a database. I'm asking myself, how are they handling this issue of funding? Do they just wait and receive an application and just look at it? They just work as and when they receive an application. If there's no database in their system that says these are the NPOs that are there that require funding, and then they look at their needs, they evaluate which one is more urgent, which one is more important than the other. How are they handling all these issues of identifying NPOs that are suitable for funding if they don't have a database in that regard? And with regards to the challenge of expenditure management, where in some instances there are no invoices to prove that a certain expenditure is for its intended purpose. And linked to that, the issue of approving grant application funding without the supporting documents like proof of land ownership or credible suppliers' quotations. Yeah, this is very worrying, especially if we talk about big institutions like the NLC. Again, it's not like we're talking about a small tuck shop in Siabusa, in Mpumalanga, where I come from. This thing, is it something that it has been happening in the past financial year 23-24, or it's something that has been happening for the past 4 years, or it's just a culture that has been there for all these years? That there will be reported expenditures, but without supporting source documents like invoices, and then a grant funding application will just be approved without supporting documents like land proof of land ownership, credible suppliers quotation. It's something that has been happening historically, or it started in the past 4 years, or it's just for the past year, which is under review 2023-2024. Thank you very much, Chair.
Thank you, Honorable Skosan. Honorable Matiwan. You are being sabotaged.
Thank you very much, Chair. Greetings to the Auditor General, the members of the committee, and our support staff. I think my colleagues have captured most of the points that I wish to raise, but I would say that we welcome the presentation by the Auditor General, and given the mandate that the National Lotteries Commission has in improving the socio-economic aspect of our communities. So if they are failing in their core function of grant making, that means that communities are at a disadvantage. So I just had some questions maybe will be for emphasis, because I think they've been asked. So I wanted to check on the conditions outlined. You say that conditions outlined in the grant were not met. However, monies were paid to beneficiaries. I want to check now, is this a case of the failure of the NLC to simplify its processes so that the intended beneficiaries can have are their processes user-friendly? Because one of the things that we've highlighted was that when you were doing the audit, they failed in the know your client. So could that be a contributing factor to them giving money to beneficiaries without some of the conditions being met because of the nature of their processes that are not easily understood by NPCs? Or if in your audit you found that they conduct training on the processes that should be followed by those who are applying for grant funding. Also, on the 150 days compliance indicator, you're saying it was omitted. I just want to check now, if that was omitted, how long did they take? Did they fall within the 150 days, or they went above the 150 days in terms of adjudicating applications for grants? And then you spoke about proactive grant funding by the NLDTF. I wanted to couple that with the case where you want to check if you're saying that the adjudicator increased funding of an applicant without the increased the funding of an applicant. So was that for a proactive funding, or did the client submit a request for funding of 11 million and then the adjudicator just decided that no, 11 million is not enough for you, we'll give you 16? And then also on the infrastructure project, you said you went for a site visit and you find that it was a dump site. I don't know if it was a dump site or it was constructed in a dump site, or you went to a place and there were no facilities, it was just a dump site. I just need clarity around that. And then just on emphasis on the Public Audit Act, I think some of my colleagues have tried to ask this question, and I've raised it with other auditors of the Auditor General. The sense maybe that the committee members are getting is that the Auditor General might not be fully exercising its powers as they have been given or they have been granted by the Public Audit Act. One auditee, I can't remember which institution we were doing, said that it would take, I think it was the municipalities, said that they would allow for a process of 3 financial years before they could issue a certificate of, normally, a certificate of debt. So would that not allow the rot to continue if it would take 3 financial years for you to issue a certificate of debt? And then in a situation where it's not a case of financial loss, you find that there was a breach of a fiduciary duty by an accounting officer, or there was fraud or theft by an employee who then runs away, resigns from the institution before a disciplinary process can be undertaken. In that instance, in exercising your powers as the Auditor General that are given to you by the PAA, how would you pursue such individuals? Because from experience, you'd find that the persons will resign here, and then they will go to another institution to continue doing wrong things. So how would you advise us, maybe as a committee or as a legislative body, to say maybe there is a gap in policy in where the people are able to go through the cracks because of that gap? So I just need your analysis on the PAE. Are the limitations on the PAE that are still holding you back in terms of having a full grasp or a full or stamping your authority as the Auditor General? Thank you.
Thank you very much. Over to you, AG's team. Please start with the follow-on questions.
Do you want to respond to the follow-up question, and then I'll respond to the PAA one?
Chair. Oh, sorry. So I was saying, Chair, the first question that was asked in terms of funds and expenditure, for me, Chair, I'm struggling to package it in a manner that I understand, because I think it included a number of things. I did get a question that how much is actually NLC earning from Ituba operations, as an example?
We can simply ask the member to just explain what they meant so that you can address the question. That will be quick.
Yes.
Can we do that? So the very first follow-up question by Honorable Neil May.
Go. No, thank you, Chair. Chair, if you look in the statements and you look in the past, you would want to see the irregular expenditure, wasteful and irregular expenditure. So if there are cases now that are being investigated to the point of 1.4 billion, it has to show somewhere in your figures, even if you have to go back to the previous year, That's what I was trying to tie up. I was trying to connect the dots between the misappropriation of funds that is being investigated and the wasteful and misappropriated funds that would be on the balance sheets going forward. Because how do you tie that up? If there's this amount of money that is being investigated, where is it in the statements going back? Chair, I don't know if...
Okay, so let me try and assist. So in the Lotteries Commission's or in the audit report, there is a topic that says reconciliation of irregular expenditure. That might be what you are referring to. It deals with 2 years, 2022-23 and 2023-24. I know it doesn't go, but I think you'd ask for a longer time period, Honorable Neil May, but let us, for the purposes of illustration, deal with what with these 2 financial years. That for the 2022-2023 financial year, the opening balance was 339, and then the following year was 566. Right. My understanding is that as the assessments continued, more irregular expenditure from the past was being identified, unless I'm misunderstanding it. And that in the 22, so you must have this, it's not in the presentation. Where is this from? Is this from? It's from their annual report, which I've got open here somewhere. But in their annual report, they reconcile the irregular expenditure. For the year under review, it's 44.852 million. From prior years, it's 566.77 million, right? So But the way I understand that it's been restated, which says to me, prior period errors, in fact it's on there, prior period errors amounted to 131 million. So I think Honorable Neil May is trying to understand, A, that history, and secondly, whether you've disaggregated between, well, you have, so wasteful expenditure and irregular expenditure, which is the kind of what the committee has become familiar with. Am I saying this correctly, Honorable Neil May? Correct. Does that help at all? It helps. Okay, all right.
Chair, to a certain extent, I'll attempt to answer the question with my limited knowledge in terms of the history of NLC, because I would only been involved from the year 23-24. But also I would want to make a distinction between the investigation and the irregular expenditure that was there previously. So when we look at this graphic on the screen, for the year 21-22 as well as the year 2021, the NLC Commission was qualified on the completeness of irregular expenditure, meaning when the team went in to audit, they identified non-compliances which constitute irregular expenditure. However, a number of them had not been presented in the annual financial statements as such. And thus the team issued a qualified audit outcome to say, currently your reporting is not comprehensive and complete enough to give a full view of how much irregular expenditure was incurred. That was not linked to the grant making process. I think at most, Corne will assist me, it was around the issues and the non-compliances around procurement and contract management, as well as expenditure management issues. In terms of the investigation, as and when investigations are completed, depending on the nature of the conclusions, some might become irregular, some might become fruitless. To my knowledge, in the 22-23, the case of Mutewa Sports Complex, as an example, was presented as fruitless and wasteful expenditure, Chair, because after having done the full determination process and the investigations, it became clear and apparent that this is expenditure that the entity could have prevented, and it was expenditure incurred in vain had management employed and implemented the right practices in place. And for those that investigation is still ongoing and SIU has not put those investigations to bed, those are still outstanding, have not been reflected on the AFS, and as and when that information becomes available, then management will have the responsibility to put them on the AFS. At high level, Chair, hoping that I'm going to be able to simplify that in a language that is not technical, the regular expenditure framework over the years has changed. My colleague will assist me. I'm not sure of the time frame. Was it 21-22 when it started, or 22-23, Chair? So previously, the full note of irregular expenditure would be sitting on the annual financial statements, meaning the opening balance, the current year expenditure, and the prior period corrections that are occurring, they would be sitting on the face of the financial statement. So when we're expressing an opinion, that would be covered on those bases. Now, there's a new irregular expenditure framework that came about, and what that does is, on the annual financial statements, the only irregular expenditure that you will see, which forms part of the annual financial statements, is for the current year, as well as the comparable year, which is the immediate prior year. The rest, which would have happened in the year 21-22 going backwards, it's not going to be on the financial statements, it's sitting on the annual report. What that means, Chair, is that we do not express an opinion on that. So management are better positioned to respond to the detail of the corrections that they would have made with regards to that, because when we audited, we were looking at the current period and the immediate preceding year, and that did not cover the amounts that are sitting in the annual report. Chair, I think that is my response on that one. If maybe there's something to add. Okay. I think the next follow-up question, Chair, was around improvements that we have noted, as well as the regression around the compliance subject matters with asset management being there for the first time. Again, Chair, I would like to make a distinction when I spoke to improvements in terms of the NLC functions. I focused on grant making processes. Things that were previously not there have been put in place. When we issued the material irregularity notifications, the key things that we were citing was that there were not feasibility studies conducted prior to those allocations being made. We also noted that the monitoring processes were haphazard and did not cover the entire value chain in the processes, and as well in circumstances around infrastructure projects, they did not have the right skills and the capacity to be able to make those assessments. Those are measures that have now been brought forward and included as part and parcel of their processes to ensure that when they award a grant funding, it is feasible, that the project that is applied for is actually going to be undertaken to completion, and also the institutions that are applying for those funds, they have the right capacity to be able to deliver on those. And also in terms of adjudication, pre-site inspections, as well as 100% monitoring, those are things that have been brought in to improve the environment around grant making processes. Over and above that, Chair, the entity is also in the process of developing a modernized grant making system, which is going to assist them with addressing issues around compliance with the grant management policies, as well as the standard operating procedures, so that they can curb and limit opportunities for such reoccurrences in terms of the irregularities that would have been in place. So those are the improvements that we spoke to. And in terms of supply chain, we also acknowledge that there are recurring issues that are still in place that need attention from management's end. However, we are also observing a reduction in terms of the number of findings that would have been issued. So when we share the message, we balance it with reflecting on the things that we have seen shifting when we made recommendations from the past in terms of how the entity is doing, but also reflecting on the things that still need their attention. So in terms of asset management, granted, Chair, we admit that there was an area which was contributed to our overall assessment in terms of us reflecting that on compliance they regressed, but on grant making we have seen nuggets and pockets of improvements that are shifting to the right direction. Thank you, Chair.
Thank you, Chairperson. If I then can continue with some of the new questions. There was a question around undeserving people or NGOs that is getting funds and the root causes. So it was asked, is it as a result of vacancies, internal controls, is it deliberate? And I think it's important to look at this. It's coming over years. So there was a time where there was the old board, there was an interim board, there's a new board. The SIU, as Panduli also now said, is currently still concluding their work, and they will come and present on the outcome of this. From where we're sitting in terms of the audit and the last 2 years where there was qualifications, the root causes definitely mostly refer to and linked to internal controls. I mean, if we're talking about completeness of information, having supporting documentation at that point, conditions that had to be assessed and made sure that it's in place before there's final approval, those weren't there. So if we look at the environment, I mean, they're busy looking, they've appointed a supply chain head with the knowledge of procurement. They've appointed a chief risk officer that is more aware in terms of the risk environment, must make sure that there is controls put in place to capture some of these and to prevent these. Panduli just spoke about the system that they've started to put in place. So if I look at the 2 years where there was qualification, it definitely talks more to the internal control environment and potentially key critical positions that wasn't filled, like the chief risk officer position that wasn't in place. Then in terms of the PAA, and I hear the members saying maybe we're shy or maybe there's obstacles, but what I want to do is to just take us through the process. It is quite a lengthy process to go through. For me, I always say there's there's obligations put on accounting officers and accounting authorities through the PFMA, which they are responsible for. Amongst others, they need to make sure that they prevent irregular expenditure, if not, and financial losses, and they need to safeguard their assets. If not, there's certain steps that they must follow. If they don't do it, that is when we step in with our additional powers or the enhanced powers. So when we identify, say for instance, like we did, a financial loss or harm to the public, we will raise the notification. We then allow the accounting authority to respond, and they will have like 20 working days, which is almost a month. We will have time to assess. If we assess that they are doing what will address and appropriately respond to the MI, we then allow the accounting officer to follow through on that processes. So if they say we're going to do an investigation, we're going to identify the people that's responsible, we're going to identify the control weaknesses and address that to prevent this from happening, we will allow them time to implement what they've committed to. During intervals, we'll check in and say, give us evidence so that we can see the things that you have promised. Have you started the investigation? How far is the investigation? Have you started disciplinary process? So we will check in and monitor and follow through to see what was committed and promised, if that is being done. So that takes a bit of time for the process to unfold. If during this process we see that they don't start the process for the investigation, or they don't start the disciplinary process, we can then escalate to the next step. So the next step is either one of two. It's either we go and say we include recommendations in the audit report, which then makes it binding for them, which will still say, go and do your investigation, identify the people that is responsible, enhance the control environment, and recover the money where money needs to be recovered. Or if there is an indication of fraud or an indication of that there is a better placed public body that can do it in terms of their mandate, we can then refer. So we have instances in the MI process where we refer to public bodies such as the MI, SIU, the NPA, the PPSA, where we refer. So once we refer, it goes to that entity so that then they deal with that matter in terms of their mandate. If we include recommendations, then there's time again. So we include recommendations in the audit report, and there will be regular follow-ups to say, are they doing what has been recommended? If they don't do it, then we go to remedial action. So in terms of remedial action, we will then also bring in the accountability ecosystem, the important role players, maybe the minister, the audit committee, whoever might be in that accountability ecosystem. We'll then also ask them. There is a function from the accounting officer or the accounting authority that needs to happen. It hasn't happened. We've went through this process. Please stay close to the matter, follow up. And only then, if that still fails and there's a financial loss, it will get to the COD. So it is a quite lengthy process, but with the checks and balances in the process, it shouldn't allow, as it was called, the rot or the incorrect things to continue for 3 years, because we are checking in. And if it's not happening, we go to the next step. Specifically for NLC, based on the actions that is there, we continuously said we can see the investigation is there. We can see that disciplinary actions has happened. We can see, so based on our follow-up, we were still comfortable that the accounting authority is actively working towards resolving this. Even in terms of the control environment, we can see there is slow movement, but there is progress that is being made. I just remembered there was another question in terms of whether the money can be recovered, and on the first question, and the answer is yes. Based on the SIU, it's part of their mandate is also then to institute recoveries. Based on the MI process that we've issued, where there was a financial loss, there is also a process of where the accounting officer must put in processes to recover that money. Thank you, Chairperson. Can I hand over to you for the detailed questions?
Chair, I think the second part of the question about possibility of recoveries was whether civil cases have been opened against officials that were undergoing disciplinary processes but resigned before actual conclusion of that process. As at the time when we concluded the audit, Chair, the answer is no. However, from the responses we had received from the accounting authority, they had maintained that they reserve the right to institute civil and criminal proceedings against these officials after having undertaken and concluded the processes in terms of the consultation with SIU as the body that is responsible and conducting the investigations. There was a question around where is NLC based. NLC has a footprint across all the 9 different provinces, and primarily the provincial offices are responsible for assisting the distribution agency committee with those application processes in terms of receiving the applications, processing them to check if all documentation is in place, and accompanied by the requisite documentation as it is outlined in their standard operating procedures. So there is a footprint across the different provinces. And also, in terms of their legislation, the entity is required to raise awareness and conduct educational initiatives to inform the public of their services, such that they can be undertaking of their service offerings across the different environments for the benefit of the communities as a whole. So that is something that forms part of their scope, and it is actually reflected on their annual performance plan as well as the report, and they would have reported an achievement against the set target for the year 23-24. And then there was a question around whether the training of SCM officials, whether that would assist. In our observation, Chair, that is much needed, and it would greatly assist when officials have an undertaking of their responsibilities and the application of the different prescripts of legislation which inform the procurement processes. Chair, the nature of the issues would have raised under supply chain management are issues that were avoidable and were simple in nature. Just a matter of knowing that there needs to be consistency in terms of the criteria you are using for evaluation with that which was prescribed in the request for quotation or in the invitation for competitive bidding process, as well as the knowledge and application of the fact that with points, if the maximum was 10 and there was a certain criteria that needs to be followed to allocate those points, that is exactly what needs to be done during that process. So it's simple matters that just needs their officials to refresh their minds in terms of how they need to apply the legislation in terms of conducting their responsibilities. And once that is sorted, then it would greatly assist. And of course, the issue of them having not had a responsible senior manager in the SCM space would have had an impact, but that was then remedied when the appointment was made during the 24-25 financial period. However, Chair, unfortunately, I must report that to my knowledge, that official resigned towards the end of 24-25 and left the entity. Currently, they're working with a consultant that is assisting them for purposes of 25-26, but for the greater part of 24-25, they did have an official playing that role. In terms of the vacancy at COO and why the NLC has not filled that position, Chair, I'm probably going to leave that one for the entity to actually respond to, because there is no particular reason why the position was not filled. The NLC is not struggling when it comes to budget. There are available funds and the position actually exists. Perhaps the one undertaking that I would like to submit is that the entity was was working on revising its organizational structure. It might have been that it's one of the positions they wanted to look at, either to increase the scope of the responsibilities of what the official needs to be doing, but there would be better positions to be able to respond to that in great detail. In terms of the data,
Sorry, may I just ask? I mean,
Yes, sure.
I mean that notwithstanding, how long has it been? Is the position still vacant even now?
Yes, Chair, it is still vacant. They just simply replaced the acting official with another.
Okay, so I know some of these are for the entity. So I'm now looking for whatever insight you have. And there's always, if you don't know, just say you don't know, right? So don't stress. So what I'm trying to understand is, so how long has the vacancy persisted? Do you have a sense?
Yes, Chair. The last incumbent resigned on the 27th of August 2022. So the position has been vacant since then. Perhaps, maybe, Chair, what I would like to also submit is that at the time when the incumbent left the position, it's something that would have actually been impacted by the investigation processes around the allegations that existed in the space. That might have played a role in terms of how they expedited the filling of that position. But at present, the position is vacant. There is no official filling the position. There was another person acting at the end of 23-24. Now there is a different official acting in that position.
So let me just ask, is it vacancy by resignation or vacancy by suspension?
It started from a suspension, then it went on to become a resignation.
Okay, well, I will ask them to provide more granular detail for their appearance here. Please go ahead.
All right. Where was I think there was a question around reallocation of funds to benefit beneficiaries. Chair, nature of NLC business would not allow them to be able to rechannel those funds to any other function. Their mandate is in two folds. It's regulatory compliance, which is aligned to the processes of the license agreement, where they are working with the license operator Ituba, and then the second part where there's money actually intended or going towards beneficiaries, that's grant making. Now, with grant making, there's a certain amount that is earmarked for research-based funding, which is what loosely we use to call proactive grant funding, as well as applications-based funding. So there is enough funds available for both functions, except with proactive grant funding. That function had been suspended owing to the improvements that needed to be made in terms of the control environment, such that the irregularities that occurred and that are widely reported on the media, as well as the investigation report from SIU, can then be prevented from reoccurring again. And as well, what would have contributed to that is at the vacancies at the distribution agency committee, in terms of the period it took them to actually conclude the adjudication process. I think one member asked, so while the indicator for measuring how long it takes them to adjudicate was omitted from their planning documents, how long did they take? Chair, I do not have that insight because that information is not presented in their annual report, so I would not have had the opportunity to audit it. However, our observation was that at year end there was a significant backlog in terms of processing grant applications, but the extent of how much that is, maybe management would be in a position to answer, since we did not audit that particular area. I wanted to also speak to the grant applications that are approved without conditions being met, whether that is a culture or it's due to vacancies and etc. So, Chair, it's important to note that in the 22-23 audit, when we came in and audited, we raised an issue and we said to management, look, the manner in which you are accounting for grant allocations is not consistent with the the applicable reporting framework, meaning which at the time when they recognize that there's expenditure and there's liabilities, that is not consistent in terms of what they need to be doing as it is required by the accounting framework. Now, management being responsive, they heeded the call and went and revised their accounting policy. Their accounting policy, for the first time, introduced the issue of conditions being met prior to them recognizing grant allocations and the relevant liabilities. Contrary to what would have happened in the past. In the past, if the distribution agency committee approved the allocation, automatically the whole value would become expenditure sitting in the books of the entity. Now, with with conditions being introduced in the accounting policy, that means they need to do a stop and start at with grant agreements that have tranche 1, tranche 2, and multiple tranches in terms of payment of the grant. At the onset, before the actual liability arises, there needs to be a grant agreement in place. The application processes must have undertaken and met all the applicable conditions and been approved by the distribution agency, and the communication sent to the beneficiary, and the beneficiary returned a signed grant agreement with the requisite supporting documents. And then the first tranche can be recognized as expenditure and then disbursements made to the beneficiary. The second layer of it is, before they pay the second tranche, they need to have received a progress report from the beneficiary, supported by the relevant documents that are going to outline how the money was spent, and site visits being conducted where applicable. Then they can recognize the expenditure afterwards, once they have confirmed that all conditions have been met. Now, in comparison to that process, the audit procedures, then we had to actually also revise them so that they can accommodate the correct accounting policy, which is when we identified and raised the issues around conditions that were met, however grants were approved. In the past, these are findings that we would not have raised, because the process in itself in terms of the accounting was different than what it was, Chair. So that is the undertaking that I would like to submit with regards to that particular question. I think the last one that I need to deal with, Chair, is around the need to establish a database of NPOs and how then the institution is managing grant funding if that was not in place. Chair, it's important that we also make a distinction between the applications-based grant funding as well as the research-based grant funding. In terms of the applications based grant funding, that has always been in place, and it has been working effectively because there were established processes, policies in terms of how that process is applied. For example, NLC would publish a request for applicants to submit their applications based on the need in their communities, with a full extensive research which starts with the application documents being completed, the business plans being supported by the proof of land ownership, the quotations from reliable sources, and etc. And then it would then they will take it through the processes and conclude an award. Historically, no issues were identified, and also it doesn't form part of the issues that are widely being reported as irregularities in the public space. Then there is proactive grant funding. That is the space where a lot of issues were emanating from, and that is due to the fact that the manner in which that grant funding was being processed and managed was haphazard and unstructured. Hence, when the new board came in, they took a decision to place a moratorium on the proactive grant funding, and also then work on improving their internal controls and establish this database, so that in the event where, based on their research, they've identified a need somewhere where NLC needs to play a role in alleviating the distress in the community, they would go into their pool and identify who can best perform this function based on their compliance documents and the registrations with this SD. So if perhaps it's a sports related matter, they would identify NPOs that actually function within that sector and then request them to submit their proposals so that they can then appoint a service provider that is going to go and deliver on that. Whereas in the past, it was a matter of haphazardly, it may be decided whether by the board or recommendation from management to the board or the executive authority that there's a need here, go and allocate funding and identify an NPO without so much as following certain processes to confine the compliance processes. Then that's where the opportunities came for other former members of management and former managements of the board to abuse the system and take advantage and rechannel money for personal gain. So that is the reason behind them now establishing a database to deal with research-based funding. Thank you, Chair.
Thanks, Chair. I think there's one question which dealt with the omission of the 150 days indicator. I think the question was it a deliberate?
Please bring your mic
Oh, sorry.
closer to, or is it?
Yeah. So the question was it a deliberate act by management or it was an oversight? So management knew, they took a decision to take it out due to challenges in that distribution agency vacancy rates. So they took a decision to say, look, we're not going to achieve, so let's take it out. So it was a decision that was informed from their side. It was not so much of an oversight, but it was a decision taken at a time. Thanks, Chair.
Okay, so just to clarify, I'm going to come to Honorable Madlala and Isaac, mindful of time. So I just want clarification. So the DA distribution agency, so the DA is staffed by the minister. The commission depends on the DA for disbursements or not. What does the DA do in relation to the mandate of the Lotteries Commission?
Chair, the distribution agency committee members, they adjudicate the received applications and approve the awards of those grant applications.
Thank you. That's very helpful. And the distribution agency is basically chosen by the minister.
Yes, Chair, they are appointed by the minister and they are independent of NLC.
That's fine. All I'm saying is that it's not in the powers or gift of the commission to fill those vacancies. The minister has ultimate responsibility for that. And therefore, if that entity does not have the people to do the work, it creates a backlog in the commission, right?
True, Chair.
In which case, and the commission would be able to see that we can keep sending these things over there. Basically, they can keep getting all of these things to consider, but there is nobody to consider them, and therefore they're not going to happen. So I just want to get a proper understanding of what happened here, because we need to know who to ask which question next time. So it's not for you here, just need to understand what happened. So that would be the case.
Yes, Chair, that is correct. So in a way,
that's not saying they were correct to simply remove it. I am simply trying to get to the core of the problem, that's all. We can canvass whether they were correct or not, and you have explained that they can't just do that, right? So that we accept. We want to understand the core of the problem, because it enables the committee then to ask even now, are they fully staffed? At what rate are they processing these things? What is their target? And so that's why I'm asking. All right. Thank you very much. Honorable Madlala.
Thank you, Chair. So just to follow up on what the Chair was asking, it means that the DA is responsible for the under expenditure. We can, I think that's the direct interpretation, that for any under expenditure, the DA is responsible.
That being the distribution agency, not the Democratic Alliance. He forgets that you'll be speaking last, Honorable Isaac. He must watch himself.
Problems run along the abbreviations. No problem. Thank you, Chair.
Please don't come back here with that.
I want to just ask a few questions, I think also mindful of the time issue. I think in summary, what I want to first establish is in terms of because I think you've given us quite a lot of detail. I mean, the HSA always does that, and we appreciate it. But in any entity, the problems will be process policies or people. So in summary, I want to just have an understanding of what do you think is the problem with the National Lotteries Commission. Let me just try and narrate it a bit. For example, there's a board that is in place. There were material irregularities picked up. There's quite a lot of issues, filling of staff and all of that. Are there systems in place to ensure those things happen? Are there policies enabling for those things to happen? In terms of your own assessment, and the problem is that they are just not being filled. There are just no consequence management. They are just high irregular expenditures and all of that. So what do you interpret to be the problem with this entity? I'm asking also because we don't want to sit here with you as our sister organization and wake up to a crisis tomorrow, having just looked at the academic presentation of facts, and for example, ignore the fact that we hear that there may be no lottery by 1st of June because there is no license operator, whatever the case is there. So we want to understand, to be empowered by the presentation to know what to really focus on and deal with as a matter of urgency. The other issue is I hear that there's progress. You see, that's why also the tone sometimes for me becomes very important. We encourage the HSA and also the SIU when we deal with them to just call a spade, not a tool to dig soil. So we want to hear it verbatimly, to hear that this is the issue. Because when there are qualified audit opinions for over 3 consecutive financial years, but we hear the tone saying there are improvements. Yes, they are qualified, but there are improvements. And then you start to explain the nitty-gritties of the improvements. I have an issue with that, because what are we measuring improvements against? Is it against the auditing standards or against previous performance? What takes priority over the two matters? So if we say these are the auditing standards, these are expected levels of performance that we have across board. So when we say you have improved, for me, you must have moved from a qualified audit opinion into an unqualified audit opinion. If you remain there, I do not understand how we would say you have improved. And that tone is very important, or rather the undertone in how we present issues is very important, because sometimes it may be an enabling factor to mediocrity levels of performance in some of the institutions. So we want to deal with them with the honesty with the honesty that we can as much as possible. I won't go into the issue of staffing. I think that's already been dealt with quite a lot, and I think it's one of the serious issues. But let me also go to some of the direct questions that I have here. Number one, I want to check the scope of the audit. For example, did the scope of the audit include the appointment of the board and the commission, in terms of the processes that were involved in that? Because there is a view that there may have been irregular processes followed in that process. And I'm not sure if that will fall within the scope of this financial year or the previous financial year. If the previous, then what were the recommendations in relation to that, and how have they been dealt with? There is also an issue that, because some of the material irregularities, they were just mentioned in numbers, so we wouldn't know what is I'm not sure what is involved in there. But there is an issue of a company, CTH, which is, I think, Cheadle Thompson Hayson, which is alleged to be not having a valid contract, or SLE, however, is contracted or is getting payments with the commission. Are you aware of that? Was that part of your scope? Is it part of your material irregularities? Was the audit made along those lines? And I think it also still boils down to the scope of the audit. The consequence management issue also is, so how many have been implemented of the lot that you've mentioned? How many individuals have been processed? And of the processed individuals, I don't know if you may know, we'll have to take that with the SIU. How many have been litigated for the recovery of monies? Because I think I've heard it a couple of times that no, they are no longer there, they've resigned and all of that, which is the case in many institutions. But we always want to know, how do we follow the money? If there were monies involved, maybe between you and the SIU, you can tell us if you are aware of that. The other issue that I want to deal with, maybe towards closure, is with regards to material irregularities again. How many adverse findings of material irregularities were identified which are attributed to the fourth national lottery licensing process? Of the ones that you mentioned, are there any, and how many? That includes the modernization project, 4.0 project. I think you may be aware of it if you've audited along those lines. Also, there are issues of when you deal with your audit, to what extent do you consider investigating issues that are emanating from whistleblowers' reports and anonymous disclosures and so forth and so on? Are there any other issues that relate to that where you find that there may be credible information worth an investigation into as you make your findings? Thank you.
Thank you, Honorable Madlala. Honorable Isaac, you get the final word.
Thank you, Chair. Morning, afternoon, colleagues and team. Thank you for the presentation. Yeah, lots has been said, Chair, and lots has been covered. I don't think I'm going to go into the nitty-gritty of the numbers. Honorable Ellen May and other colleagues did interrogate. I unfortunately am not in a position like other colleagues who sit here and have researchers send them a whole list of questions and you rattle it off. I try to apply my mind and listen to the presentation. But be that as it may, lots has been covered. But I think, Chairperson, in your introductory remarks, you kind of summed up the issue about, it's really all about people. And here is yet another perfect example of an SOE that is failing purely just because of people not having the right fit for purpose, people in the right positions. And I mean, this is not rocket science. And then, of course, the issue of people resign when the water gets too hot, and people just think that they would get away. Some do get away, but lots of my questions that have been covered and discussed, Chairperson, I think I'm going to reserve, some of my questions towards the SIU when they come, because it's really about the information that's emanated from your report. What is ironical is I just find it difficult to comprehend. How is it that funds are disbursed? I think you covered that in your report. Funds are disbursed, and there's no signed agreements in place with institutions or contractors, but yet funds are disbursed. I don't comprehend how there's no agreement in place, nothing's been signed, people just get paid. Let's not go over the material losses and 46 million, and there's so many other issues that I think I'll just reserve that, Chairperson, with the SIU report. And then lastly, I'd just like to touch, I think you might have touched on it, but again, why is Gauteng always the preferred province for these contracts or these projects, if I might put it that way? Wat van Mpumalanga en wat van die Vrystaat en ek wil probeer verstaan hoekom ons dit spesifiek Gauteng. Dankie, voorsitter.
Thank you very much. Over to you. Thank you.
Thank you. Let me start, and then I'll again hand over to Apindule. So there was a question around how do we treat and consider whistleblower reports. I can confirm all whistleblower reports that come to our attention we do consider, but we consider it from a from our mandate, and therefore we look at the risk that it brings to the audit work that we bring, and then we will enhance our procedures during the audit to respond to that. And usually when we get a response, we will respond, not usually, we respond back, and then we will refer to the audit report, because the normal process is then that once we've addressed the risk in the audit, if there's a finding and it's material, it will impact the audit report. So that is where we will then refer the whistleblower to. But we don't necessarily do an investigation, but part of the audit to address our audit risk. To the honourable member, yes, you're correct. There was no improvement in terms of the audit outcome. For 4 years, they have been qualified. I think from where we're positioning it to say we sit back and we look at how deep-founded some of the issues were. And then in terms of processes, policies, we see some improvement. But you're 100% correct that at this stage, there is no improvement in the audit outcome. The matters that we've highlighted, I think, is important for future better audit outcomes. The policies that is being enhanced, the accounting policy that is being enhanced, the system that is being implemented. I think it is important that in that bigger context, we just indicate that we, from where we're sitting, we do observe that some of the right things is starting to take place for future audits and performance. Thank you. Abdullah.
Thank you, Chair. On the appointment of the board as well as the commissioner, I think the question was, does that form part of our scope? The appointment of the board members is a function that takes place in the department. So in terms of the scope, then it's audited in the department. However, we have identified as an area where we are going to liaise with the officials in the department to assist us with that particular procedure, so that we can have insights in terms of whether there were any issues based on the allegations that are coming from the media and other platforms. In terms of the appointment of the commissioner, we did include that as part of our scope, and no issues were noted from an auditing point of view, as well as the policies of the institution. With regards to Cheryl and Thompson, Chair, we do not have an MI that relates to that. Maybe I can look more into it on the file to see if there's anything else that I can share with the committee in writing, but from an MI point of view, that does not form part of our MI notifications that we would have issued. The notifications are more on grant management allocations, and Cheryl and Thompson, my understanding is that they are a legal representative of NLC on some matters. With regards to officials that resign before disciplinary proceedings are concluded, Chair, I would have shared earlier that based on the correspondences that we reviewed from the Accounting Authority, there was an indication that the entity reserves its right to institute civil and criminal proceedings against these officials. However, at the time, those had not been instituted. In terms of the modernization project, which is being undertaken by the entity around ICT-related systems, that forms part of the scope for 24-25 financial period, as that is the year when they started with the implementation. It was not part of what we audited during 23-24, so we do not have insights in terms of that area. In terms of agreements that are not signed, Chair, I just want to make a bit to share that at the time when management recognized this particular transaction or these particular transactions as expenditure, there were no signed agreements, but payments had not happened. So in terms of the disbursement in its actual self, the payment had not been made, but the management had incorrectly made a mistake of recognizing a transaction where a grant agreement had not been signed. And in terms of the compliance of the accounting policy, that did not meet all the conditions, because one of the critical factors is that there must be a signed grant agreement in place before they present that on the annual financial statements. In terms of why the grant funding is concentrated more in Gauteng compared to other provinces, Chair, my honest view is that it's awareness and understanding of the service offering of the entity in the other spaces. My team and I, when we joined the team for 23-24, we all made a statement to say, had we not been part of the entity, we didn't know what NLC is doing. Our understanding was National Lotteries, it is Lotto that we know in the TV and all of that stuff. But the grant making function is something that they need to invest more in the public having an awareness of their service offering and what funds are available and the processes that need to be followed in terms of the applications. I think the recent call for applications was issued beginning of the year due to expire around March, but from what I understand, that was extended. I just don't have the time frame to what period. I do not know if there was an uptake from the other provinces in terms of those call for applications in terms of responding to them. So it's more awareness and assisting those provinces with the application process so that when their submissions are ultimately reviewed, then they are compliant, they are not sent back due to missing documents here and there. So it's mostly awareness and education training which they need to provide in the other outskirts that might not have an understanding of their service offering. Thanks.
Thank you very much for doing the work itself. For the detail in your presentation as well as the detail in your answers. A couple of things have become apparent to me, and this is an ongoing kind of inquiry in inverted commas by the committee, because the SIU is still coming here, and then we will have to deal with the minister and the commission itself thereafter. But one of the things, as I explained during break to you, that the committee grapples with is the length of time between the end of the financial year, the audit taking place, the completion of the audit, its tabling with the annual report, and then the time that we have the conversation here. And we are always looking for ways in which we can improve the impact of the work that we do. And Honorable Madlala says this all the time, that if we're not going to see a visible change in what happens, and we are also wasting our time and taxpayers' money sitting here. And one of the things that we will have to, and it's not just, and this is a sort of a comment right across, not just with the specific entity you do, there are certain things that need to be done in order to get to a better audit outcome or the ideal audit outcome. The institutional changes that have got to take place, the change in policies, the change in standard operating procedures, the filling of vacancies, the speed with which it's done, how people are selected, and that kind of thing. And one of the things we'd like to work with the AG's office on is perhaps at some point during the year or in the gap, kind of getting a sense of whether the underlying interventions are taking place or not. Because it's of no use when we hear the audit, we all throw our hands in the air and we say, how can you do it? It doesn't help. So a point at which we can work together with those entities to say at 6 months point, right? So in other words, the Auditor General gave you feedback on such and such a date. You are given 6 months, however long it is, to start putting some things in place. Please come and see us and tell the Auditor General how far you are with those things, so that we can know whether we're making progress towards getting an outcome. Otherwise, we end up with the problem that Honorable Madlala is speaking about, which is there are improvements, but the final outcome is still not good. You know what I mean? So anyway, I'm saying this in response because I always try and get an insight out of our discussions here. And I think part of how the committee has to evolve its work involves those kind of things as well. Also, thank you for the explanations around the different legal entities and how they work, as well as who appoints whom, because again, we possibly would have shouted at one or two people for the wrong thing now we know what questions to ask, and that is the value of these interactions that we have with you. So thank you very much for your patience with that. To the honorable members, thank you very much for your contributions to this discussion. Thank you to our team sitting at the back, and also with me for the support that you give to the committee. So thank you very much. We adjourn.
You Chair.